Morning, everybody. Welcome to the April edition of the Specialist Mortgage Web Show. I hope you're all well. I'm just looking to see attendees is shooting up. I've got a question. Is there volume? I'm hoping there is, because someone said yes. I'm hoping that everyone else can hear me. If you can't, then just type. If you can, I'll just continue. So, just as I always start, for those of you, and there's quite a few of you in the room that I've not seen as an attendee before. So my name's Tony Sutton, Managing Director of Specialist Financial Services Limited. I am your host for today. A little bit about me. I've been doing this quite a while. After almost 6 years with a specialist lender and subsequently a broker, I set up my first commercial and second charge brokerage almost 35, it would be 35 years on the 11th of May at the tender age of 25. You can work out how old I am now. This grew from a two-man operation to having 141 employees at its peak, but I had a massive falling out with my business partner because he was a bit of a dick. And I then left the company with all those employees, started in my kids' playroom at my house, just me and my wife. And within 11 months, I had 5 people working from my house, and my wife screaming at me, "It's coming up to Christmas soon, and we've got people coming over for Christmas dinner. Can you get these 3 people out of our dining room?" So I then moved into 3,000 square foot of business premises, traded really successfully for 4 years until the crash took away all my lenders. Didn't take away the clients, just the lenders. So we all know what happened thereafter. But I've been involved in the market throughout. I didn't go away, do something else, then come back. I stayed with it. It was really, really tough. My turnover in 2009 and 2010 combined was less than what I turned over in March 2008. That's how bad it was. But stayed with it. Here we are today, 40 years of doing this in the specialist finance market. We have a claim to fame for each of the speakers, but obviously there's only so many claim to fames that I've got. So I always end chucking the occasional claim to shame. So this is one of them. Now, I've tried to find a photograph that might start this story, but please don't think, seeing who's in that photograph, it's not what you're thinking from this photograph. So I just want to make that quite plain. This was, when was it? 22 years ago. I took my family, my wife, 4 kids, packed them in the car, drove all the way down to some place just outside Bordeaux, a massive campsite. And one of the nights they held a karaoke competition. There was a very decent prize for the winner, and over 750 people in the audience. So I thought, yeah, might give it a go. So I was getting a lot of pressure from my wife and kids because I've been known to sing a bit in the past. And after downing literally half a dozen vodkas in a very short space of time for a bit of Dutch courage, I put my name down to sing "Don't Let the Sun Go Down on Me," the George Michael version, a song that I'd sung a few times in public before, and it'd always gone down quite well. There was a few decent attempts from some other holidaymakers and a few absolute howlers, as you can imagine. And I thought I had a good chance of winning. And I was the penultimate act. So I'm thinking, yeah, I'm not seeing anything so far that is going to really, I should be okay. So I started off well, got to the end of the first verse, nerves had disappeared. I'm strolling around the stage doing a bit of this and a bit of this and all that sort of stuff. Hitting the high notes, crowd were cheering, clapping, and I got to the final chorus, built it up, something to remember. The voice was absolutely shot. Got to the end of it, that's when it went south, because the French karaoke version decides to chuck in a random verse at the end from the middle of the song. So what happens, I looked at it and I had people going, "Go on, carry on. And I thought, I don't know what I'm supposed to do. And I absolutely froze. And then complete terror overcame me. No more cheering, clapping at all. I was further mortified when the very, very camp French compere was shouting out, "Hey, sexy Tony, sexy Tony." So my youngest son is listening to this in the next room, and he'll probably remember this. He was only 5 at the time. He'll probably remember this like it was yesterday. I stood there for a minute, still not moving, and eventually I was escorted from the stage. I returned to my seat in what felt like a 10-minute walk of shame. My initial misguided confidence in that I might win was destroyed when the next act, the final act, came on, who was a professional Frank Sinatra impersonator. I was actually beaten into 3rd place by Frank and also a 10-year-old girl who could not sing a note. So that was the end of my singing career in front of many, many people. I've done it a few times since, but never again will I enter something in front of that many people because it's put me off for life. I don't know how people can do it. Anyway, that's my claim to shame. Our sponsor this month is MT Finance. A major thanks to them, and also a major thanks to our first speaker who stepped in at very, very short notice, because our BDM from MT Finance, who was going to be presenting today, handed his notice in last Friday and therefore is on gardening leave. So he's stepped in at very, very short notice, as you can imagine. He's never done one of these before, but he is head of the bridging department, so he's going to know what he's talking about, let's face it. Okay, please remember we are depending on outsourced technology, which includes the equipment we use, our broadband not being affected by rain, believe it or not, or I don't think it's going to rain today, the speaker's broadband, and Microsoft not getting the hump because we don't use Teams, which has been known to happen. Already today, my laptop has decided to try and download a Windows update, which will then normally automatically close me down and restart me. And it has happened once when I was doing a physical presentation up in Newcastle some years ago, where as I started talking at the end of the finishing off the day, my computer switched off. So please bear with us. Obviously, we are very much dependent on things like broadband and that sort of stuff. Hopefully, fingers crossed, we should be okay. If you have a question, go to the type your message box in the bottom right corner, and we'll get to all the questions that we have received in the time we have, if we possibly can. These are pictures of obviously our speakers today. I won't go through each name, it's going to be introducing each of them individually, but you might actually, if you don't know who the lenders are, you might recognize the logos. So there you go. And that's our schedule for today. 4 speakers. We're alternating this at the moment between 3 and 4 speakers on the shows. So the ones with 3 speakers are called the mini specialist mortgage web show, and these are obviously the full one. So we're due to finish around 1 o'clock today, but if the speakers get a move on and I get a move on, then we should hopefully be finished sometime beforehand. That's the plan, but you still get the same CPD. Okay, today's objectives. Obviously, as always, you're here to hear a little bit more about, specialist finance and what the market entails and what's available. And also, obviously, for your CPD. I'm not going to lie, that's what many of you are here for, to get your CPD. But we'll be covering specialist buy-to-let, we'll be covering commercial mortgages, we'll be covering residential second charges, and we'll be covering bridging finance. Each presentation lasts approximately 20 minutes. If you see me appear after 20 minutes, it's because they're going over time. So it's just a little reminder to them to maybe wrap it up. It has been known for a speaker to go on for 45 minutes before they're even ready to answer some questions. So the idea is I will just ensure they don't go over time. 10-minute Q&A after each session. And please, please, please ask questions. There's no such thing as a stupid question, because the speakers have set themselves questions, but I quite often find the questions they set themselves, they've already covered in their presentation anyway. So ask questions. There's no such thing as a stupid question. All I'd ask is, if you're writing a question, just make sure it makes sense to others who might be hearing it, because sometimes we do get asked questions and I think I'm not quite sure what answer you're trying to get from it, because it's a little bit vague. And obviously, make sure the questions are actually directed towards the speaker and not general questions, but asking questions about the general buy-to-let market, because that's not what they're here for. Basically, they're here to talk about their products. Feedback and CPD questionnaire will be sent to you automatically after today's show. Absolutely vital. Ask questions about how we've got on, how the speakers got on, what we need to improve. And it would also ask you to rate each speaker for their presentation. Very, very important, because if we find that someone isn't good, and occasionally things don't go quite right with speakers. We've had speakers who've been speaking for the first time and it's been a bit of a car crash. Well, of course, we won't ask them back because if they're not someone that's has the skills to speak in front of a laptop, then we'll just make sure next time somebody more senior or one of their colleagues does it from that particular lender. So please give us the feedback. It's vitally important. And as far as your CPD is concerned, it will be emailed to you. Now, I'm going to restate this probably 3 or 4 times today. It will be emailed to you by 5:30 tomorrow. Okay, please check your spam folder if not received. Last month, I had 3 calls about within an hour of the show finishing saying I've not received my CPD. 5:30 tomorrow. So please, 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 please don't then phone me, phone the staff, or send us emails, because there's a lot of these to get out. We don't just send you out a blank one that you write your name on. We actually send one out with your name on it. So just give us some time to get it done. And of course, we just want to make sure that, obviously, we do sometimes get people who log on for 1 minute and then go off and then ask for some 3 hours of CPD. That's not the way it works, of course. So, but please bear with us. It will be with you by 5:30 tomorrow. If you then haven't got it and it's not in your spam, give us a call. Updated guide. I updated this last week because there's been some changes. It now has to be updated again today. So there will be a new one on hopefully tomorrow if I get the chance. Download from our website, or you can access at the end of today's show. Just basically tells you how much you get for each of the lenders that we have basically access to that you normally wouldn't do. For example, we wouldn't put down BM Solutions and TMW on there and how much we pay. Absolutely pointless, because you get paid the same as you. But that's available for download today, as is both of these still, which we've been running these now for, it's almost 6 years we've been offering these. And this was very simply something that we started doing all the way back in 2018, when everyone was going, watch GDPR, and you had companies frightening the life out of everybody, saying that if you don't do this, it's going to be doom and gloom and you won't be allowed to trade and all the usual nonsense. But come to one of our seminars, it only cost you 1,300 quid. Of course, all the parasites came out of the woodwork, as they always do when anything's going on. So I just went on didn't really know what to do myself, to be honest with you. I'm not an expert on GDPR, anything of that nature. Just went on the ICO website, found they had a checklist. I copied and pasted it, put it into a document, did it ourselves, and I thought, what a good idea to give this away to people who attend our shows. So these are available to you as well. They're available on our website, but also be available at the end of today's show. Just by following the links, use them as much as you can. One's the one that you should have done to 2018 if you've not done anything. Over 50% of people in financial services have not done anything on GDPR, believe it or not. It's just there, just in case the worst happens, you or a member of staff clicks on a dodgy link that it shouldn't have done, and then all of a sudden you've got the ICO and the FCA crawling all over you, trying to work out how much they can fine you, because they might need a new work of art on the wall of their boardroom. I'll come on to that later. But those are available. The other thing that's available, this has proved to be very popular and very useful as well, because again, I'm not an expert on consumer. I'm going to have a lot to say about it later, by the way, but I'm not an expert on consumer duty. I don't think anyone is. Even the people who say they are the experts, and even the people who actually work in this stuff all the time. But one of the things on vulnerability was that we found, what is a vulnerable customer? Okay, we can probably work that out. But then what the important thing is, what should you do if you get a vulnerable customer? What is the best course of action? If you've got staff, just to make sure that you're all following the same path, what's the best way to work with that vulnerable customer? And again, this wasn't me knocking up a document from scratch. A little bit of plagiarism involved. We received all pretty much at the same time 4 different documents from lenders that had actually been issued via the UK finance to lenders, not brokers, not the people at the sharp end, but to lenders. So I just basically combined all of those, put it into one document, slapped our logo at the top, use it in-house, but this is available to you as well if you want it. So just all you do, type VC into the, type your message at the bottom. And I'm very glad I didn't call it vulnerable document, by the way, but just type VC into the box, and we'll get this over to you today. Sometimes we get enough people, actually we send it out to everybody, but it's there for you to use. Obviously we're not responsible for it. All I've done is just to copy and paste what other lenders, or 4 lenders, actually put together. Okay, consumer duty. Now, normally I say I'm not talking about it anymore, but I am talking about it later. Because I'm a bit cross at the minute, I must admit. But to start with, if you want to learn a little bit, learn even more about consumer duty and what is coming up, I suggest you sign up for this one. In the 23rd of May, we have once again Robert Sinclair, CEO of the Association of Mortgage Intermediaries, who presented twice last year, and his shows have now gathered, I think it's over 1,000 views. From people worried about consumer duty and what's involved. Well, this will be the second stage of implementation, what's coming up into this absolute nonsense of legislation that we've been faced with. Not to be missed, sign up for it. There's no limit on the numbers, but I do urge you to actually sign up to that, because this is one of the people who's not trying to flog you something, like something I saw on Monday, trying to flog you something that is quite simply is supposed to help you with consumer duty, but probably won't. And that's the real problem I've got with things like consumer duty and the guidance that we're given as brokers. I think at times it's shameful, absolutely shameful. But still, that's the way it is. If you didn't see the ones previously, we got the ones 25th of May last year, and also the 25th of October last year. Robert did 2-hour-long seminars with me. I urge you to watch those as well. If you haven't seen those, watch those first, then sign up to the one next month. And they're available on our website to watch on catch up, as are all our shows, including the other Sutton, the specialists that we've run last year. So we had Family Building Society, we had Tuscan Capital, and we had Roger from Tandem, who's no longer at Tandem, unfortunately, was made redundant last week. But no doubt he'll appear in another guise very, very soon. We expect very, very soon. But a great shame to see Tandem have decided not to continue with their first charge offering for the time being. And also there was another one that we run I think it was last month. Yeah, it was in March. Volatility creates opportunity. We had less sign-ups than usual for this one, but we also had the best feedback we've ever received because, quite simply, it was unusual what was being spoken about, and I urge you to watch that one. Again, an hour long. I think it was about an hour and 10 minutes in the end. You'll get your CPD as always. As I'm about to probably say on the next slide, but have a watch of that one as well. Scott Marshall was on great form that day. It was one of the best ones we've done, I believe. As it says, as remember, you get CPD for every show you watch. So this month's prize draw giveaway, one lucky delegate will win a £100 Amazon voucher. Stay with us later on. That'll be around probably about 12 o'clock for your chance to win. Just so you know, the way we do these is that we watch who's actually been watching the show. And then I'm given a list of numbers alongside the names, and I will ask Tony Grillo from Together to just give me a number. So if you decide just to, in a minute, close it down and then come back at 12 o'clock, you won't be in the draw, basically. That's the way it works. So it's for people who actually do watch the show. If you decide just to leave your computer on and disappear somewhere else, then I'll never know any better. But you then might miss the draw anyway, which a few people have in the past when I called out their name. So, but stay with us because that's later on. You've got a very good chance of winning it. Yeah, 100 quid, and that will be sent to you by Together probably within the next 24 hours if you win, of course. Okay, one last thing. If you are one of the 11% of FCA authorised brokers who are thinking of surrendering their permissions and leaving the industry, because we are seeing it in droves at the moment, especially from more senior people in the industry, have just absolutely had enough of what's going on with this ridiculous regulator that we now have. Please call me on the number there, 01442 935 935. We've now got quite a few people who've just said, you know what, I've had enough. But I've got this client bank. My clients still need help. Would you help me service it? I'm going to basically just move away from the industry because I just can't do this anymore. So we're here for you. If that's the way you're thinking, give me a call. We'll work out a deal. Okay, first presentation's about to start. Get yourself comfortable. There will be a short sort of 10-second break where I don't move so that we can edit these later on. So bear with us. Our first speaker is, I'm hoping I'm pronouncing this right, Benggio. We've never met because he stepped in right at the last minute. And he is there somewhere. Where is he? His camera and his microphone are currently turned off, but hopefully he'll appear. I'll talk very slowly. Here he comes. Raf, can you hear me? No, your microphone's off.
Hi, Tony. Yes. Can you hear me?
Excellent. We can hear you.
Perfect.
Marvellous. So I'm looking to see what football team you support. I can see a full team shirt on the wall behind you.
Oh, no, that's not I'm a Manchester United fan for my sins.
Oh, dear. Okay. All right. Well,
exactly.
We won't talk about that.
We'll move on quite swiftly.
So welcome, Raf. Thank you for stepping at such short notice. As I mentioned
pleasure.
before, one of his colleagues that was supposed to be presenting handed his notice in and on gardening leave. So
parting gift.
Yeah, exactly. But can't be helped. But I think this is someone who knows his stuff when it comes to MT finance and the market. From what I've read, he does know his stuff. So, okay, you should have received this on email this morning, which is their bridging loan product guide. Raf will be talking about bridging today, and this will be with you on your email. A little bit on Raf. He's had 10 years experience in the specialist finance industry across regulated and unregulated bridging, refurb and development finance with a specialised focus on underwriting and credit risk. He is CMAP qualified and has proven experience in managing underwriting teams, improving lending processes and delivering excellent customer outcomes with a demonstrated track record of exceeding lending targets. His claim to... Oh, no, he's got a bit... Sorry, I forgot. Yeah, his CV is a little bit long. It actually comes in 2 editions, this one, so it's on page 2. He joined MT in 2020 from Marshaven Bank, heading up the bridging department as head of lending. He's responsible for overseeing the regulated and unregulated underwriting teams and the overall management and performance of MT Finance's bridging offering. Originally born and raised in Gibraltar, Raphael lives in London with his wife and young daughter. He is an avid Manchester United fan for his sins and Formula One fan. So there you go. His claim to fame: when he was around 10 years old. We've got a little bit of a thing going on today with the royal family, which will come, obviously you'll realise when I introduce the next speaker. Raphael met Prince Philip, Duke of Edinburgh, and shook his hand. He remembers being in awe of him, probably because he was about 3 times the size of you.
Yeah, exactly.
There's his claim to fame. Raph, it's down to you. I'll see you in about 20 minutes. Good luck.
Lovely. Thank you, Tony.
All yours.
Thank you all. Thank you, everyone. So as Tony said, I'm here to just talk you through everything MT Finance, what I believe makes us special, what our niche is in the market. So without further ado, essentially, why choose us? Why MT Finance? It is an overcrowded bridging market at the moment, I would say. So why come to us? What sets us apart? So we've been supporting the UK broker market and intermediary market since 2008, when MT Finance initially launched. We launched initially as a purely unregulated asset-based lender, which I will go into in a bit more detail, but I think that was our niche from the outset. We were very much an asset-based lender, looking at what are we lending on as security, what are we lending on as what kind of property are we lending on. If we got comfortable with the asset, with our lending level, that was usually our main sort of underwriting focus. Obviously, we looked at the clients and what the money was being used for, but we tried to have a very commercial output once we had got comfortable with the security we were lending on. So we were very much an asset-based lender. I think one of our niches is that very quickly, early on in the inquiry stage, we will tell you if a deal works for us or not. We much rather give a quick no than a protracted yes that turns out to be a no. So I'm very much a firm believer. If it's not for us, we'll tell you immediately. If it is for us, then obviously we will try and find a way to make the deal work, which again, I'll go through in a bit more detail. A bit more about MT Finance with regards to our funding lines. We are backed by some of the largest institutional investment companies in the world, with trillions under management. So again, that provides certainty as you as an introducer, as an intermediary, knowing that you're coming to MT Finance and there's certainty of funds, there's the liquidity behind us, backed by some of the largest companies in the world. So that gives you and your clients comfort. So one thing that is in MT Finance's DNA, and it has been since day one, which again, I very much, any new starters and anyone in our team, it's very much one of the first things they learn about us is our service proposition. Our service proposition means absolutely everything to us. It's the DNA of our business. So we always strive to be the best in the market of service. I don't think there's something that any lender can ever get to, but as long as we are striving to be the best continuously and provide the best service, then that's all I can ever ask for my team. We strive always to be as open and communicative as possible with our introducers and our brokers. At the end of the day, we see it as a partnership. We're working with you on this case to get this completed as soon as possible. None of us get paid if the deal doesn't get complete. So we very much see it as a partnership, working with you guys, being as open and transparent with you and your clients as possible to get the deal done. You'll get a dedicated underwriter, as well as obviously a BDM. So the BDM will probably come visit you in your office or take you out for a coffee or a drink. And you will get assigned a dedicated underwriter and a case manager on every deal. So you immediately, very early on in the transaction, will know who your points of contacts are in the business for your case. And obviously, I'm always available to speak to any introducer or broker. There's any obstacle that comes across, or if it's feedback or anything, I'm always available to speak to as well. We've won 14 awards for our service proposition alone, which is something, again, we're very proud of. We've been going just over 15 years, and to win 14 awards for our service is almost one a year, which again is something we're immensely proud of, because again, like I said, our service proposition is absolutely everything to us. And so it should be. We're in a service business. Yeah. So like I said earlier, we are very hands-on. We try and strive for a very transparent, communicative approach to our underwriting. You as an introducer will have direct dialogue with your underwriter. You'll have their direct line numbers. You'll have their email addresses. You have their contact details. Again, we urge introducers and brokers, as well as I urge our team internally, to pick up the phone. I'm very old school like that. Nothing beats picking up the phone and speaking to someone. Do you know what I mean? I think that can avoid many issues sometimes when you pick up the phone. Emails sometimes can be communicated ambiguously, and I always strive everyone to pick up the phone, speak through any issues, and I'm sure we can find a solution to make it work. As well as an underwriter, you'll obviously have a dedicated case manager. they deal with some of the admin, but also some of the chasing solicitors, pushing the case across. So they're very much instrumental and paramount to the progression of the case, and they will be the one that will send you regular updates throughout the case to let you know that the val has come in, that legals are progressing, if anything's outstanding. Very much of the mindset that you as an introducer and a broker need to be fully aware where the case is at any one given moment in time. I know how frustrating it is if a client calls you up and you need to call us to get an update on where you are. So I very much always tell the team, I don't want any introducers chasing you for updates. You give them an update before they even ask for it. So that way you guys are armed with the information you need to go back to the client or to chase the client solicitor and know exactly where you are with the case at any one given moment. And yeah, we have a very much a manual underwriting process in the sense that there's a real individual, a pair of eyes looking at every single case that comes through, whether that is the new business team looking at inquiries that come through, myself probably agreeing inquiries, and then underwriters and case managers, and then through to sign-off process. So we're very much underwriter focused, very commercially driven, and they will be looking at every single case that comes through the spectacles of how do we find a way to make this deal work, which again, I'll go through in a bit more detail. Like I said, so moving on swiftly. So we are solutions focused. I do believe 9 times out of 10, there is a solution to every single problem that arises. Whether it's in legals, whether it's security, whether it's underwriting obstacles that come across. I mean, we've all been in this game long enough to say that we wish that every deal would slide through seamlessly with no issues arising, but unfortunately that's not the way it works. And there are sometimes obstacles or legal issues that we didn't know about that present themselves during the case, which can cause sometimes some issues. However, we very much are solutions focused in the sense that we look at the case on its own merits. What are we lending on? What's the loan to value? What's the profile of the client? And always try and get comfortable to make the deal work in any way possible we can. Again, it goes back to what I was saying, that we try and have a very transparent and communicative approach with our brokers and introducers. We see it as a partnership. We speak with you. Together, we'll find a way to make a deal work, find sometimes a different solution, think outside the box. And I think that not only adds value to you as an introducer, you add value to us as a lender. So we can find a way to make a deal work. I'm very much of the believer that there is usually always a way that we can make a deal work. And of course, we've got published criteria, and we've got our product guide, which I believe Tony said will be sent out to all of you. So now we've got our published criteria. However, we very much urge introducers and the brokers that we deal with to just give us a call if something you think falls outside of that criteria, who you think, oh no, MT won't look at that, it's not in their criteria. Give us a call. There's many times we've done stuff outside of our published criteria. And again, that comes back to us being solutions focused. If we like the look of the deal, the profile of the client, the security, the loan to value works, then we will always find a way to offer some terms and make the deal work. So we can always consider something outside our published criteria. And again, it goes back to what I said earlier. If we think it's not for us, you'll get a very quick no. Say thank you very much, but this one's not going to be one for us, and you can move on. However, it might be outside criteria, but we can get comfortable with it, then you never know, we can find a way to make a deal work, which we've done many times in the past. So again, it's always worth getting in touch, a quick email or a quick phone call. Would this be one for you guys? We can take a quick look at it and give you a very quick no, or say yes, potentially, we just need a bit more information. So again, it's always worth it. So bridging finance as a whole, just to delve into that a bit deeper. So what is bridging finance? I'm not teaching any introducers to suck eggs, but it's just, I thought might be worthwhile to just go through exactly what bridging finance is. So I think bridging finance back in the day was literally designed to bridge the gap between buying one property and selling another, essentially a chain break transaction, which was, I think, where bridging finance originally started, and is probably the most simple form of bridging loan you get. I want to buy a new property, but I haven't managed to sell mine yet. I get a bridging loan to help me buy the new property, and once mine sells, I pay it back. Cheap, easy peasy. I I would probably say they're few and far between. I wish all of them were as simple as that, but I think that is part of the magic of bridging finance, in the sense that it can be used for so many things now, which again I'll get onto. But yes, bridging finance is a great way to borrow money in the short term. It's much quicker than a mortgage. We have done cases from initial application through to completion, funds in the client's account within literally a matter of days. I think we've done one in 36 hours. 2 to 3 days before. An average, again, depends how good the client's solicitor is, but again, it's very quick compared to term finance. Can be arranged quickly if speed is of the essence. That's exactly what I was saying. And we can sit behind a mortgage without disturbing the current borrowing. So second charge on a client's main residence, they've got a mortgage which they may have locked in a few years ago when interest rates are very low, and they don't want to touch that for obvious reasons. So we can get consent from the first charge lender, sit behind them as a second charge. And again, that doesn't disrupt your mortgage, but allows you to sort of raise some funds on your residence and use the equity that you've got there. So again, it's just another way that bridging finance can be used. When to use bridging finance, this I find is extremely important, especially in the market that we are today. I think us as lenders, we have a responsibility to educate as much as possible on the different uses of bridging finance, because I do believe it's an extremely important tool, and especially in today's market. So regulated bridging. MT Finance launched our regulated division at the back end of 2020, November 2020, we went live, and the team has only been going from strength to strength, which I'm very proud of, and it's great to see. But yes, so regulated bridging is anything lent on a client's main residence, essentially, where the client lives in or immediate family live in. That is regulated by the FCA, and obviously there is certain provisions that have to be adhered to. So regulated bridging, essentially, as I went through, to prevent a chain break transaction is the most common. But it's also to release capital for deposits. We've got some older borrowers, should I say, that are looking to raise money to gift to their children. They've got a child looking to buy their first property, and the parents are sitting on equity in their main residence. They want to borrow money on their main residence to gift to their children to help them on the housing market, and maybe their exit's going to be an equity release mortgage. So again, they're just releasing capital either for gifts or for deposit or for someone else. To repay debts, to raise funds for renovations, including refurbs and extensions. We see a lot of that, a lot of regulated extensions. People, I think, especially over the market over the last couple of years, people are not looking to want to move home so quickly, and instead they are making more space in their existing residence. To complete a self-built property. So we don't do ground-up development finance. However, we do heavy refurb. So whether that's for a large extension or a conversion or renovation, but we do see a lot as well as clients have money to start a self-built project. They're building a house that they're going to live in. They get to wind and watertight stage, and maybe they underestimated their budget, shall we say, which happens quite often, I would say. And they need a lender to come and step in. As long as the property is wind and watertight, the roof is on, the windows preferably are in, or if not going in imminently, then we can come in and help fund the rest of the internals, whether it's at first fix, plastering stage. That's something we can look at, something we do quite often. So property purchase, capital raise, conversions, below market value purchases as well are considered. Business purpose, lease extension. So you see, just on regulated bridging, there's numerous different kinds of situations where a regulated bridge might be the best option for your client. Unregulated bridging. So unregulated bridging, of course, by nature of the name, is unregulated by the FCA, and this is anything that's being done for commercial purposes, for profit, for commercial gain. Something like an auction purchase. If you are a property investor or a landlord and you're looking to buy a property at auction because you found a good deal, and obviously a mortgage won't go through in time, you get an unregulated bridge to buy that, and then you can refinance this out with a buy-to-let mortgage or something of the sorts. Undervalued purchases, people need to move quickly. Again, bridges would be the perfect tool for that. We see a lot of commercial, residential conversion projects, whether that's under permitted development or not. Again, sometimes a bridge is the absolute best option to help you fund the work, to help you fund the purchase. We do offer as well heavy drawdowns, which means we can lend something towards the purchase and then drawdowns to help you actually fund the works. And then again, you can refinance us with term finance. We do holding bridges, whether you're looking to buy something and then maybe get planning on it or a planning gain. Uninhabitable property purchase, so properties that wouldn't be suited for a mortgage because of the state of the property. Again, we look at the whole case as a whole. What are we lending on? What's our risk level, our loan to value? What's the profile of client? Have they done this before? That's something that we see a lot of as well. So why us specifically? Why us? Why come to MT Finance for a bridging finance inquiry? So our USPs, we offer both regulated and unregulated bridging loans. And I think that helps in the sense that there are times that something comes to light, an unregulated loan that makes the deal regulated. And sometimes that can scupper the deal as a whole. But for us, if that happens, we literally move the deal from one desk to the other, to the regulated desk, and they can continue with the same legals. Obviously, they have to reissue documentation, but it's a seamless process. So that is definitely a plus. We go up to 70% loan to value across both regulated and unregulated. Clients can borrow anything from 50K up to 10 million. Securities in both England and Wales. Terms from 1 month to 24 months. There's a cap, an FCA cap on 12 months maximum for regulated lending. On the unregulated side, we lend to limited companies, LLPs, expats, offshore companies, companies based in Jersey, BVI. We see it all, and we've lent to all before. So again, there's options there. Like I said, we do first and second charge lending. Our age range is between 21 and 85. We can sometimes consider slightly older if there's a power of attorney in place and the deal makes sense and it's for the benefit of the person in question. We lend on residential, commercial, and semi-commercial property. We have no exit fees and no ERCs. So we always tell our clients, tell introducers, get your clients to pay us back as quickly as possible. A bridge is meant to be short-term finance. They're meant to come in and out as quickly as they can. They don't want to be paying any interest that they don't need to be. All we have is a minimum 1 month term. So if a loan goes out, they do need to complete that within, they have to pay 1 month minimum interest, but after that, they pay us back. We calculate it to when they repay, and that's it, really. And like you say, we lend on a property's open market value. So we get a valuation, we get the open market value, the 180-day and the 90-day, but we lend on the open market value. But again, it just gives us a better idea of the security in the property we're lending on. It's just a very quick sort of flow of how our process works. So we have our inquiry process. We've got a new business team and we've got BDMs on the road. You have an inquiry, you get indicative terms within 2 business hours, if not quicker. Then we ask if your client's happy with those terms. We get an application form, an inquiry form, and then we move immediately to offer. We send you valuation quotes. Once the client's happy with valuation quotes, they pay pay a legal cost undertaking. We do our underwriting, we get that through, and we get the deal funded as quickly as possible. We understand time is of the essence when it comes to a bridge, so we are very much of the mindset that we need to get every loan completed as quickly as we possibly can.
Raf, could we just limit to a couple of case studies because we're running a bit short on time?
Yeah, absolutely, no problem.
The bridging trends that you've got after it is probably going to be very interesting to a lot of the delegates. So
no problem. I'll go through
11 case studies. We just limit to a couple. And then
I've only got 3, but I'll go through maybe 1 or 2, and then we can go through.
Yeah.
So here you go. So here's a good example of an uninhabitable auction purchase. I mean, you can just tell by the picture the property wasn't in the best state. There may have been some structural issues. So you can see here a client had a winning bid on an unoccupied residential property valued at 177 grand. The property was subject to a prohibition order, which restricted anyone from living there due to safety concerns. So for a lot of lenders, that probably would be unsuitable security. But it was something that we could consider. The client required 115 grand to complete the purchase. So we had a valuation instructed immediately, legals issued on the same day that we received the report back. And within 10 days, we managed to complete that case on a first charge at 65% LTV. And we include a stipulation: the property must be made habitable within the 12-month term. So the benefits to the client here is that he managed to buy the property at auction. He didn't lose it, saved their deposit. They have 12 months now to undertake the renovations to make the property habitable. So obviously from an underwriting point of view, we would probably make sure they had the money to do those works. We would look at a schedule of works and be comfortable on that side. And once complete, the property will be sold and the client will make a substantial profit. So that's a win for a client there, absolutely. So this is just an example of how we can cross-charge. So sometimes we can take additional securities to lend your client more to make the deal work. Here we had a retired couple purchasing their new main residence via the sale of their existing unencumbered property. Sale of the existing home was not going to be finalized in time. The clients had a share portfolio but wanted to avoid liquidating any of this. So we issued a 568,000 regulated bridging loan secured against both the current home and the new property. 45% loan to value based against the combined market value of 1.28 million on a 12-month term. And the benefits for the client, they managed to not lose out on their purchase of their new home. They kept their share portfolio intact, and the 12-month gave them time to sell the property with no early repayment charges. So again, just a very simple chain break transaction where we took both the purchase and the exit property as security to lend the client what they needed. I'll just skip through, if that's okay, to go through bridging trends. So this is something that MT Finance started a few years back now. Apologies, I can't actually remember when. And we've got many contributors who support us and gives us data and information. And what we do is we publish it, believe every couple of months, our data, and then obviously we've got our total data for the year. So this is looking back on 2023, and it's just a snapshot of where the sort of market is, but I do find it very interesting. So you can see this is a snapshot of 2023. You can see, I mean, it is a bit small, but you can see underneath, you can see the difference between 2022. So you can see transactions, 53.7% were unregulated and 46.3% were regulated, which is an increase from 44% being regulated in 2022. So I have seen a bit of a common trend of regulated bridging becoming more and more accepted and more sort of used within the industry. You can see the average monthly interest rate is 0.87 across our contributors. Average completion is 58 days, which is, I would say, too high, but there are many factors I think that contribute to that. Average loan to value 57%. So there's our contributor gross lending. Obviously, this is a snapshot of the market, but it shows in 2022 there was 716 million, and in 2023 831. So again, progress is all going in the right direction, I would say. And again, this one is very useful. It's what are people using bridging finance for? So you can see auction purchase was 7%, business purpose 9%. Chain break is still the most common use of bridging finance to not lose out on a purchase. Investment purchase 20%, rebridges 8%, which is slightly doubled, I think, from the year before. So clients having one bridge, not being able to exit in time and going to another bridging lender to sort of rebridge that bridge to allow the exit to go through in time, which is something, again, we can consider. You can see refurbishment, heavy, 11%, regulated refinance, unregulated refinance, both at 10%, and other refinance at 3%. So again, it remained consistent in 2022. Preventing a chain break is the most popular use. Do look out for these. It's very useful to get just a snapshot of where the market is, where it's going, compared to previous months or quarters or the year before. And yeah, that's it for me. So our tagline is effortless every time, and that's something that we try and drill into everyone in our team. Our job is to make your jobs easier and to get the case through as quickly as possible with minimum fuss. However, if problems, obstacles arise, then our job is to work with you collaboratively to find a solution and get the best outcome for the client.
Nice one. Thanks, Raph. Well,
Thank you,
there's no questions. So I'll go on to the questions that you haven't covered these. So question one, what do you think a specialist lender's role is amidst economic uncertainty?
So I'm a very firm believer that when there's economic turmoil, or probably what we've seen over the last few years, and banks, the traditional banks, sort of restrict their lending and their criteria, I think that is when really the specialist lending market, and specifically bridging, that is really our time to shine. That is the time when the clients who are desperate and they need finance and they need a bit more flexibility can come to a bridging lender and be looked after, essentially, in the sense that this is where we need to educate introducers and clients that bridging finance can be a really useful tool for your clients if they're in a sticky situation and they need urgent finance. So this is during times of economic turmoil, I really think bridging finance can really come into its own and really have a massive positive to play in the market and give clients the options they need in the trying times, really.
Okay, Yvonne has asked the question, do you lend in Northern Ireland?
Unfortunately, we do not. So we are just in England and Wales at the moment.
Okay, I think that's pronounced Owen. Forgive me if that's incorrect, but I believe it is. What areas do you lend in?
So we lend in all of England and Wales. We don't lend in Scotland or Northern Ireland for the moment.
Okay, that's purely because of the different legal situation, I should
imagine. Yeah, it's something we're looking at, but not just yet.
Okay. And Abin has asked, what is one of the biggest challenges? What is the one biggest challenge there is for bridging lenders?
I think I would say one of our biggest challenges is staying true to ourselves, in the sense that there is a lot of competition in the market. It is a bit saturated, the bridging market, and I think new lenders come in and try and achieve market share with either high loan to values or garish criteria. We have stayed true to our DNA and what we are about for the last 15 years. So I think we concentrate on ourselves and what we can do best, and continually strive to give the absolute best service we possibly can in our market, which has worked well for us for the last 15 years, and not be too worried about the noise that's going on in the rest of the market, and concentrate on ourselves and what we can do best. And I believe if you do that, then the business will come. I mean, there are many challenges, but that's just one that I think came to me off the top of my head.
I think lenders, one of the biggest ones that lenders find is a broker who's inexperienced in bridging, not knowing how it works, not giving the full picture on a deal.
Yeah, absolutely. But I think there is a responsibility to us as a lender to then educate that broker and talk them through what can be done and how it works and all of that.
Yeah, I mean, it's one of the first things that most lenders do now is Google, as do we when we get a deal and we go straight on Google. It's amazing what you can find out via Google, such as one we had recently where the guy had been in prison for, I shouldn't laugh, but he'd actually murdered his wife.
Oh, wow.
And was then looking for bridging finance. Now, that's not something you can hide, unfortunately.
That kind of follows you about, doesn't it?
Yeah, it does a little bit for forever, pretty much. So we was upfront with lenders we approached. No one would do it because of reputational risk, but it was one that there's no point wasting a lender's time by trying to hide something.
Agreed. It will always come out. So it's best to warts and all give all the information up front, and then we can make a commercial decision.
I think another challenge lenders have is that there's always sometimes where there's a lack of confidence, maybe in your knowledge, if someone doesn't have the knowledge of bridging, in sending in the requirements piecemeal, rather than collating everything together and sending it all up. What underwriters don't want, any underwriter of any lender, they don't want to be picking that case up 10, 12 times. They want to pick it out once. They want to pick it up once. They want to, and I was really pleased what you said right at the start, that if a deal doesn't complete, we don't get paid and you don't get paid. That's refreshing to hear from a lender. Because unfortunately, some lenders seem to forget that. They seem to think they're there as a barrier to any business going through, and they're protecting their employer. They're not. They're just going to ensure their employer makes them redundant at some stage. They're not making them
exactly. No, I'm a very big firm believer of that. There has to be sort of a partnership between lender and broker to get the deal done.
Very much so. Stephen's asked the question: have you found your default rate increasing?
Surprisingly not, actually. It's a bit different on regulated and unregulated, so it's actually surprising to see where the default rate is sort of increases more on the reg or unreg side. But so far it actually has sort of stayed consistent. We did expect it would increase, but no, actually, so far, fingers crossed, touch wood, we're okay.
Okay, I'll ask one more question, which is one of yours. When submitting an inquiry or application, what can a broker do to make the process more efficient?
This is literally just what we were just talking about, Tony. So I think getting as much information as you can up front, warts and all, absolutely everything, submit it to the lender, or have a conversation, a very initial initial conversation, even if it's just heads of terms, just tell me everything you know about the client, about the deal, what's the money being used for, what's the exit. If I'm armed with all the information, I can make a much better informed decision as to whether it would be one for us. The last thing I hate is having to say no. That's a piece of information comes to light that bit further down the line that could have been told me on day one, and I could have said, unfortunately, this isn't one for us, and not wasted anyone's time, yours or ours. So yeah, getting as much information as you can. We very much train our new business staff to almost semi-underwrite deals, to tell the broker pretty much what we're going to need from an underwriting point of view on day one. So the broker has the information to get as much of a package deal across to us as possible. We feel if we get that, there is such a higher chance of the case just sailing through and completing quickly. So yeah, I would say give us all the information, give it to us as packaged as you can, as most as you can. Now, sometimes we understand if you're waiting for information and there is an urgency to the deal, don't delay. Obviously, pick up the phone, let us know immediately. We can get cracking immediately, and we'll wait while we're waiting for something. But the more information we have on day one, the better. And in my experience, the quicker the deal completes.
Okay, and that's where we come in, because as you'll see from the product guide we've sent you over, the commission to brokers is from 1%. Well, we receive 2%, and if you come through us, we pay you 1%. So you get paid the same as if you went direct, but of course you get the added bonus of my 40 years experience on the regulated side. Kirsty heads up my regulated side. She's been on the regulated side for 27 years. Joe's been 29 years. You can't buy that sort of experience. You really can't. And we will get more deals through, quite simply, because we know how to put a deal together. So please, by all means, go direct if you wish. We can't restrict what anyone does. That's the idea of these shows. It's for education. But of course, we'd like you to use us wherever possible to place your business, because we will complete more for you, quite simply. Simple as that. And we've been with MT Finance all the way back to 2009, when it was just Toma and I forgot the other director's name. Josh, sorry, yeah, of course. Yeah, when it was just them, pretty much. Just launched into the market, and it was like, we've got a bridging lender. Wow, we've actually got a lender that's willing to lend money.
Yeah.
Thank Christ for that. Okay, Raph, thank you so much for stepping in at such short notice.
Thank you, Tony.
Very interesting to hear what you got to say. And it's always good to meet the head of underwriting at any lender, because let's face it, that's the person that makes the decisions. So that's the one you always want to keep sweet. So thank you so much. Enjoy the rest of your day.
Thank you so much for the opportunity. You too.
Simon will remove you from the room. Don't close it down yourself, because you could shut down the whole show. So
no problem.
I will then just begin, hopefully. Next speaker, Mark Dobson from Redwood Bank. Mark, we've known Mark for quite some time, actually, and his previous guys as well, because he was with another lender previously, covered our area, and then moved over to Redwood. I can't quite remember. It might actually be on the slide in a moment. I've not seen these slides, by the way, so which would have helped. Mark, how are you? Can you hear us?
Really good, thank you. Yeah, can you hear me okay?
Yeah, can hear you fine. Yeah, you've got a window behind us, so you've got a bit of a Jesus-like complex at the moment. You've got this glow around your head.
Oh, brilliant. Oh, brilliant. So, well, that'll be my, I guess that's my fake background that I've got on.
Yeah, it's a fake background, is it? Okay. It's all right, we can see you. It's a bit, yeah, a bit of a glow around you. Okay, so you should have received this on email this morning. This is Redwood's commercial product guide. Obviously, Mark's talking about commercial mortgages today. And a little bit about Mark. He's a business development manager for the South region at Redwood Bank, and he has over 20 years experience in business and commercial banking, having previously worked for NatWest, that's where we know him from, and has been at Redwood for over 3 years, where he looks after the commercial and residential investment loans, as well as owner-occupier. Mark has recently been skiing in Lapland, which I've done as well, and it's bloody difficult because of the types of those Nordic skis you use.
Yeah.
My wife got to the top of a bridge. It took her about 20 minutes. She actually got to the top. Unfortunately, she got so knackered, she then just went backwards and did a Bridget Jones, pretty much to where the bar was. So she took the skis off and went in the bar. And that is a true story, believe it or not. Yeah, but, it is really difficult, that type of skiing. And he's also a Southend United fan. Yeah, I've never met one before, so there you go. I've now met one. So, but my nephew was actually signed by Southend onto their books at an early age, but he's just moved to Ipswich. So,
good for him.
But Southend, I think they're they're in the conference now, aren't they? Are they conference?
Yeah, one of those types. Yeah, national type league.
Okay.
Yeah.
So he's obviously an Essex boy as well. Obviously very close to Southend, I would have thought as well. Okay, so claim to fame. I did say there was a bit of a royal family theme going on today. Mark recently met Princess Anne. So there you go. I don't think there's any more royal family that are coming up today. But there's Princess Anne. What was she like?
Really, really nice, actually. We was at a charity event which Redwood were affiliated with, and I got told about 2 days before that she would be coming. She'd be the guest of honour, and it was my job to introduce her to all of my guests. So I had to kind of do that thing where I walked along a line of people and introduced her to each one by one, which is a bit daunting, but
okay,
yeah, it's good.
Nice one. Nice one. Okay, well, now it's over to you, Mark. So you've only got 5 slides, so we could be having an early break, hopefully. So over to you. I'll see you in as quickly as you get these done, really.
Great, yeah, thanks, Tony, appreciate it. Yeah, and I think you will, really, because I mean, Redwood's sort of lending products are relatively straightforward. So we do predominantly investment lending and owner-occupied lending. So yeah, thanks for the introduction, Tony. I'll say no more about that, really. I think you've covered that off. Thanks very much. So a little bit about Redwood Bank. We've been trading 7-8 years now. We've got offices in Hertfordshire and in Warrington up north. We've got a national BDM coverage, and really, sort of as the years have gone on, we've gone from strength to strength. So exceeded profits that were forecast to be made. Just filed our latest accounts, and they're proving to be even more stronger than we thought they would be. So at this stage, we're at a point where we're continuing to grow, expand, and now considering new products on top of the investment lending and owner-occupied mortgages that we currently do. So good time for us. Got around 130 staff based between the 2 offices, and yeah, we've got coverage across the country as well in terms of BDMs. The whole sort of concept behind Redwood's lending is that we do class ourselves as a specialist bank, manual underwriting approach. So we don't kind of have a portal option yet, although it's something that we're considering. So applications that you put forward to us will be manually underwritten, and that gives us the opportunity to explain the deal, explain the customer, and explain how we want that deal structured with that manual process. The benefits of doing so gives us the opportunity to talk about what security we think are sort of appropriate. There may be things like credit blips, there may be sort of quirks and niches that we need to explain, that we need to get round. And with some cases, customers are sort of considered for a different kind of structure of loan. We've got some cases where tranches are required, so it's useful to be able to explain that, and each case basically is personalised to that customer and that applicant. Say the manual underwriting team, so I was with them yesterday. We've got a close relationship, so it's good to talk through each case with those in the office yesterday, and kind of sitting next to them. So it's kind of that kind of approach that we have. We try and focus on speed to application and speed to approval. Now that does, I sort of heard you mentioning towards the end of the last presentation about the sort of quality and the information pack that comes through for that application. So that does very much rely on that. But once we've got all the information that we require, our aim is to get the application written up into credit and back with a credit approval within 4 to 5 working days. Now, obviously, that depends on the sort of the influx of applications we've got at any given time. But this week we're managing to meet that expectation. So we try and focus on speed, and we're trying to get quicker than that at the moment. So flexible approach, it is human underwriting, and the speed are sort of the 3 things that we try and focus on when we're dealing with your applications. And today I've been asked to talk to you guys about our commercial proposition and what we can do in terms of commercial loan. We have at the moment got a green cashback award that we've just launched, so you can get cashback on your properties if the EPC qualifies. This is something that we've just sort of a new initiative, really. Customer generally pays 2% arrangement fee for commercial lending, and we pay 1% away to you as the broker. But on top of that, the customer is entitled to a cashback. So we're trying to incentivise customers for basically having an EPC which is A to C. And when the loan completes, they'll get a cashback on their arrangement fee. I think there was a commercial. Oh, there it is. missed that one. So yeah, so we've got a commercial product here. This is just a very broad overview, and actually in the last 4 or 5 days we've actually launched a new product, so I'll talk about that as well, and our kind of approach to commercial lending. So generally speaking, we lend from 125k as our minimum loan up to 6 million, and that will fall into all types of entities. So that could be limited company, LLP, partnerships, and sole traders. We'll consider all types of entities. We'll also consider lending to SIPs and SASs as well, which we're seeing more and more of as a sort of common type of loan that customers are considering. In terms of rates, variable rates start from 4.49 over Bank of England base rate. Now you can imagine that we're not seeing many customers opt for the variable option at the moment, and we've got 2, 3, and 5 year fixed options. So those fixed options actually start at 7.39. They're all structured over a term of they can be over a term of 25 years. So although we do a 25-year commitment period, effectively, the loan is actually fixed for the first 2, 3, or 5 years. What that basically means is that we don't give we don't build in like a 5-year period where we say to the customer, right, we want to review your facilities and we want you to sort of consider banking elsewhere or that kind of thing. We basically say at the beginning of the loan, this is how long you've got your loan for, and the initial period is fixed if that's what the customer opts to do. That includes investment lending and commercial, and obviously the customer can apply for the green product if they wish to do so and if they qualify. Now that 7.39 fixed rate, that's like our headline rate. That is the product we've launched recently, which is a 5% product fee, and that allows sort of the benefit of doing that kind of product is that because the annual debt payments are lower, it puts less pressure on the debt service cover overall, and it basically allows the customer to borrow more. So although it might not be suitable for every customer, it just gives us another option that we can offer to the customer. But generally speaking, there's a 2% arrangement fee, and the minimum or headline rate with that product is 7.99, and that's on, again, a 2, 3, or 5 year fixed up to a term of 25 years. Now, a lot of customers will talk to us about our interest-only offering on commercial, and with Redwood Bank, the current stance is that we prefer commercial lending to be on a capital and interest basis. Now, having said that, we do understand that some customers want interest only for cash flow, so we allow up to 10 years initially interest only, as long as the debt service cover will support that. So each case will be judged on its own basis. Investment lending is kind of straightforward, really. We take the rental income that the customer gets from the property, and we look for 130% debt service cover on that loan. So there are other things that would factor in. So applicant landlord experience is a key, and the strength of the tenant is important as well. We don't go overboard with diligence on the tenants, but we do like to see who they are. Have they got a website? Can we see a little bit of track record on them? But really, for Redwood, our focus is on the fact that we're lending to experienced landlords, and we expect them to be able to do their own diligence on their tenants, and we understand that it's them that's deciding who sort of occupies their property as a tenant, and that is ultimately who's paying the rent. So commercial investment, we see all kinds of things really in terms of landlords, things like retail, warehouse, industrial units. We've done a couple of pubs recently for landlords who've got tenants in, and that kind of thing. And that sort of ties up, I guess, investment lending and moves us on to owner-occupier, which falls under the same bracket. So commercial lending, owner-occupier. With owner-occupier, we look for same sort of debt service coverage, so 130% cover on the pay rate, but the way we assess affordability is based on a 3-year trading performance. So we ask the customer to provide 3 years worth of accounts and some information that really just gives us a really good idea of what profit is available in that business to cover the loan costs. So generally speaking, 3 years worth of profit, 3 years worth of EBITDA. We'd factor in what drawings do they really need out of that EBITDA, not necessarily what's taken, but what do they actually need to cover their lifestyle costs, and also any other debt commitments. So, for example, if they've got 100 grand profit every year for the past 3 years, but they've got 3 or 4 lorries which are on finance and costing them £70,000 per annum, then they might only have 30,000 left to cover loan commitments. We take the cost of our loan over an annual period, and we times that by 1.3 times. And if that meets within the 30,000, then generally speaking, the debt is covered, and we've got a loan that we can consider for serviceability. Now, with owner occupied, there's always all sorts of things that you really need to consider. So, for example, one that I've looked at this morning where the profits are £150,000, but the year before they were only 20. So the things that we need to look at is, what's the reason for the spike? Is that a trend, or was that just an off year? And what's it going to be next year? Because if a business is making 150 grand profit every year for the past 5 years, then we can kind of get comfortable, generally speaking, that they've got an average profit, and we can go with the fact that we think that their profits will be that going forward. But if we see sort of ups and downs in profits, it's really getting underneath and behind, the reasons why. So they might have a new client, for example, or they might have someone making new orders which are guaranteed for the next 10 years, for example, or they might have signed a new contract which is going to guarantee their income for the next 10 years. It might well be that they just had a really good year off the back of an event or something like that, and it's not going to happen again, in which case it wouldn't be responsible to rely on that profit to service their loans going forward, on a consistent basis, because they might not be able to make that commitment. The other really key thing is the rent that the customer pays. So if the customer's paying, £30,000 in rent, and the loan costs are only really going to be 20,000, then you've got a really strong argument the fact that that business can afford that loan, and we can add that rent cost back, and that's what helps us with our adjusted EBITDA position when we're assessing debt service cover. So that covers off owner occupied. The only other one thing to mention with commercial lending is that we often take the customer's age into consideration. Our preference is for loans to be repaid by a sort of age around 75, although we don't have a hard limit on that. Each case is judged on its own basis, and that's part of the manual underwriting process for us to explain the term and the reason that we think that term is suitable. So we go to 25 years, but there does have to be a point where we say, actually, we like the loan to be repaid by a certain point, which all forms part of the application process. So that covers off our investment lending and owner-occupied lending. The other point to mention is semi-commercial. So semi-commercial will generally fall into either bracket, really. It could be a landlord letting out a semi-commercial property, or it could be an owner-occupied who's got perhaps trades from the unit downstairs and there's 2 flats above. So those assets will generally be dictated by the income weighting. And this is a real USP and niche for Redwood. So if the income is weighted towards commercial, so the shop downstairs is generating 50 grand per annum and the flats upstairs are generating 20, then we will treat that loan as a commercial weighted asset, and it will benefit from a commercial product. So that will be what I've just spoken about in terms of the term and interest rates that we can offer. If, however, the income is weighted towards residential, then it will benefit from a residential product, which is something we also offer. The rates on residential products are more attractive, and they are. We can do a longer term, and we can do full interest only basis as well. So there are some benefits to our residential products, which I can talk about another time. Types of assets that we fund, it could be most things really. So some of the things that we've done recently are an MOT station on an owner-occupied basis. So customer has been trading from a garage for, I think, last 10, 15 years, and they got the opportunity to buy their garage. Very consistent profits being made every year. It's quite a straightforward deal. The rent was far more than what the loan costs were going to be, so it made really good sense for the customer to take that loan. He did that on a 20-year basis. His interest rate was 7.99, fixed for 5 years. There was a 2% arrangement fee, and 1% of that fee was paid to the broker. We've done a garden centre on an owner-occupied basis. Again, really strong average profits or average profits being made. We've done a pub where, again, customer has owned the pub for the last 5-6 years. The pub was a sort of what you could regard as a sort of local pub in a small village, but well known. They sold wet and dry food, so they had a good source of income on both counts. Reviews were really good, website looked really good, and you could see that they were fully booked all the time for food. So experienced owners. Again, the loan costs were less than what they were paying in rent, so it made really good sense for them to take a loan to pay off and own a property rather than rent it. One of the other loans we've done recently is also for a pub, and that was to via a SIP. So the customer owned the pub in his SIP, but he wanted us to lend money to the SIP provider to buy that asset, basically as an asset for his SIP. So same kind of deal, but via his SIP, which obviously had tax benefits for him. And generally speaking, you can borrow 50% of your SIP value, so that worked well. We're kind of coming out of the effects now from COVID. We did see on an average basis that COVID was really throwing the figures for a lot of businesses, and that made it really difficult for us to try and get that average picture of the business. So we understand that COVID affected that business, but what we really try and get to the bottom of was what's the average, performance in terms of financials for this company, and how do we work that out? So, for example, the pubs that we did, we looked at before COVID and after, and we kind of ignored the years that COVID affected that pub because the before and after figures were very similar, and it was clear that the business hadn't been closed down, and receiving grants and things like that really affected it. So covered SIPs and SASs. We'll consider customers who've got credit blips. We understand that happens from time to time. Our sort of key is finding out that the customer can afford the loan, they're not in financial difficulties, and we're not going to sort of burden them or make the matter worse by lending them the money. We'd need a good explanation as to why they have got credit blips, or there might be defaults or CCJs, and as long as they're being resolved and the customer can demonstrate that, then we can normally consider those kind of situations. We will lend on the valuation price, not the purchase price. So very often customers will buy things at a discount, particularly if they're sitting tenants. So on your owner-occupied cases, a lot of customers will be offered their premises at a discount because they've been paying rent there for the past 10 years, for example. And we can take a view on that, and we'll lend on what the property's worth, not what they've actually purchased it for. We'll always expect some sort of contribution from the customer in those cases, but again, another area where we can be flexible. I'd say as a sort of tip, it's always worth Googling your customer. We've had a few situations recently where we've had mortgage attempts from customers that have got issues going on outside of mortgage applications. For example, adverse press where they've got prison sentences due and things like that. So I think always worth sort of something new that we didn't do many years ago, but now is quite a key thing to do for each application. Last thing I was going to cover off really was process. So the way we work here is that you reach out to me with your proposal, give me a call or an email with what it is that you're looking to do, and I can just give you a very broad steer on whether it would be something that Redwood would consider, and if so, what kind of loan that we think what we could get, and if we could achieve the objective that you're trying to get to. So whether that be highest loan amount or best rate, for example, or quickest in terms of speed, whatever it is, let me know, and then I can come back to you and we can sort of agree whether that might be something that we can consider. And then I'll pass you over the application forms and info pack that we need for you to provide to me. We write the application up into underwriting for a full credit backed approval, and once we've got that, we supply the customer with some valuations, some legal quotes for them to proceed through to the next steps. And hopefully a nice quick completion is what we aim for. So I think that covers me off, Tony.
That's all, Mark. Thank you very much. We've got one question from delegates. Paul has asked, what's your minimum property value?
Well, the minimum loan size is 125,000. So we'll lend 70% loan to value on commercial. So I'll make that off the top of my head around 180,000 for a commercial property, and we can go to 75% on residential weighted assets.
Okay. I have seen deals from you in the past where there's been a number of securities that have been lower value but under one loan. So are you still doing those?
Yeah, absolutely. Yeah, so I had the same example this morning. Actually, a property that was presented to us was going to take us below the 125k minimum loan size. So he's gone back and actually the customer said, "Can you consider taking 4 of my properties? I'm trying to refinance all of them." So we'll take all 4 properties, even though they're lower value, add them all into one, and we've got to a loan of around 320,000, which we're progressing with, and they're all basically commercial units which are all let out to third-party tenants.
Okay, nice one. No more questions from delegates. I'll go on to the ones that you've set yourself. What are Redwood's USPs? You've mentioned one.
Yeah. So it's I guess first of all it's that underwriting process, the fact that we can explain if there are any niches, quirks, credit blips, things like I had one last week where the customer said he wants the loan but he doesn't want to give a PG. So we were able to explain in the application that the customer didn't want to give a personal guarantee. So, and then the other thing is semi-commercial assets, particularly where if the income is higher on the residential side, we will apply a pure residential product to that. Whereas I think a lot of other lenders in the market will do it on floor space. So it's key to look out for those. Always speak to me about those. And then any assets which are let to charities, housing associations and things like that we can consider as well.
Okay. What are your top tips at getting loans approved and completed as quickly as possible?
Well, I caught the sort of the back end of your conversation before, Tony, and it was exactly the same, really. Just trying to get the information in its entirety at the outset and completed fully. You know, probably 9 times out of 10, the information that we get in is either you know, the alley isn't filled out, or the application isn't signed, or they haven't selected if they want the fixed or the interest only option. So it's kind of taken out of that back and forth between ourselves and you guys in terms of just trying to get the information completed and accurate.
As I said on the last presentation on the MT Finance one as well, obviously we're here today to try and promote ourselves and take business from delegates. We've been with Redwood since they started, and have a great relationship with you and a great relationship with the team. And so if you do have a deal, and I mean our system, for example, I'm going to cover this later on, but our quoting system, which means we've got all of Redwood's products actually on a quoting system where we can give you a quote within minutes, rather than sitting on the calculator and trying to work out whether it fits on DSCR and ICR and everything else. It does it all for us. That's all in there. And right. just say, but again, we know how to present and package a commercial deal.
Great. Yeah, absolutely.
And like I said before, the worst thing for anyone, I was an underwriter many years ago. This was just in the 80s. I was an underwriter at a lender, and it's human nature. It's part of least resistance. You pick up the files first of all from the brokers you know are going to be submitting basically a full pack. The ones you leave till last are the ones where it's. I mean, we used to have brokers who send over an application form and a credit search and expect us to underwrite the rest of the case with a whole shopping list for them. So we was doing their job for them. Those are the ones that would get seen at the very last. Whereas the ones who did their job properly were getting same day completions most of the time.
Yeah, we'll always make a start on these applications and we'll say, look, we've got to a certain point, but actually we just need to know, you know, how much is a tenant paying or what the costs, for example, you know, that kind of stuff. So.
Yeah, and do your research as well. I mean, we're very fortunate. We've got access to Equifax and Experian. So one of the very first things we do when we get a deal in, we search it.
Yeah.
Because that will immediately tell us which lender we should be potentially looking at, and you know we don't want to be finding out a week or two later after it's been submitted that the client's got 4 defaults in the last year because it's not going to fit with that lender it's been placed with. So we do that straight away. We do a land reg straight away to check there's no title issues. We do commercial searches on the company to make sure there's no issues. So, you know, have their accounts been filed, for example? Any CCJs lurking in the background? Has there been, you know, who are the shareholders? Who are the directors? All sorts of stuff that sometimes clients don't give you the full picture.
No, that's right. Well, all this sounds like music to my ears, to be honest. So it all sounds really good.
Presenting
the
the
other
case
thing was
properly is absolutely key to any lender, and
absolutely,
and warts and all as well. And we've already mentioned Google. Doing that Google search on them, like you said, you've had a few deals recently where people are about to go to prison and that sort of stuff.
Yeah.
We had a deal a little while back. There was a client that owned a bar and had been turned down for finance by the high street because he was looking to purchase the bar because somebody had spiked a girl's drink in the bar, and the police were called, and it was in the papers, and it was declined by that lender for basically, well, we don't really want to get involved with something like that. It wasn't the owner who spiked the drink; it was a customer, and it was being dealt with by the police. So that sort of stuff. So let lenders know there is there's some stuff on Google about this, but it's nothing to do with the client, and that fortunately has been successful. And with the submission. So it's just doing your homework first of all, which is what we do. Quite simply.
Sounds great.
Okay, I think have we got one more? I'll ask one more. We've got some more from Avin's asked, what is your average turnaround time? We said turnover time, but I think it's turnaround time.
Yeah, so average. I've just approved a loan this morning actually that come through, and we've sent it out at 9 a.m. this morning. I think we got all the paperwork in for that on Friday. So application, all the stuff coming Friday. We wrote the application up, submitted it Monday night, I think. So what's the day now? Thursday, isn't it? So we try and do it within 4 to 5 working days to get a fallback credit approval to the customer.
Okay, I've just realised actually I'm actually drinking from a Redwood mug, and it's a good quality mug as well because it's not none of the coatings come off it, unlike all the other mugs we've got in the office.
Oh, that's well planned. That is. That's brilliant.
So yeah, there you go, Redwood mug.
I've been trying to get rid of them for years.
Yeah, absolutely.
I'll
thank you very much.
arrange.
Absolutely wonderful. We will see you very soon. Come and see us in the new office. You can we'll get a photograph of you. You can see behind me. This is our wall of. Our training wall of fame, which Redwood will now have, will be up there. So get yourself in the office and we'll do a photograph and stick it on LinkedIn, the usual nonsense we have to do.
Yeah, great. I'll send you an email afterwards.
Yeah, let's get something in the diary. Simon will remove you from the room. And thanks again. Speak soon.
Thanks for having me on, guys. Appreciate it. Thank you.
Our next speaker is Amanda Lammers from Precise, with Precise's lovely new logo that they brought out a couple of weeks ago. Hopefully I didn't spend too much money on that because not much thought's gone into it, let's face it. Well, there is a full stop at the end of it. That's the important part. But there we go. We saw that and we were, what the hell? But still Precise, the same lender. And as great as always, we've always found them to be great. You would have received their product guide this morning. We've also sent you, see there it says correct as the 28th of March. We've sent you, since Amanda sent this over, there has been a new one come out, so we've sent it over to that's the one we've actually sent to you today. A little bit about Amanda. She's been business development manager for 8 years. She has also worked as a broker, so can understand the struggles brokers have, particularly in a tough market. Amanda started her BDM career at Coventry Building Society before joining the OSB group and jumping into the world of specialist lending about 3 years ago. She finds it a more rewarding and interesting side to be on. Amanda likes being active and recently took up golf. I hate golf. She finds this just as rewarding, but also very frustrating. That's why I hate it, which I'm sure many of you can relate to. I was officially the world's worst golfer. In fact, second worst golfer. The one who was worse than me recently won a competition. So he's obviously stayed with it and improved. I gave up in 2006 because it was costing me too much money. I was absolutely awful at it. Let's face it. It's only the only way to describe it. Amanda's claim to fame, and do forgive me because I wasn't sure where this was. I knew where it was, but I wasn't sure whereabouts. Amanda grew up on a farm in Nebraska, worlds away from her current life in London. She realizes now she's not cut out for the country life. I did Google Nebraska just to make sure there wasn't a Nebraska just outside of Milton Keynes or something, but there's not. So I presume it's Nebraska in the US, which is probably 3 times the size of the UK, I would imagine.
It's not. When people ask where I'm from, they're like, "Oh, where are you from?" The States, and you think it's not the most cosmopolitan place, sadly.
No, I can imagine.
I don't go back too frequently.
Don't blame you. Don't blame you. Right, over to you. I'll just come back if it doesn't work with you changing the slides, but I'm sure it'll be fine. I'll see you in about 20 minutes.
Lovely.
Over to you.
Thank you very much. Thank you very much. So hello, everybody. So as Tony said, my name's Amanda. I cover the kind of northwest London and actually bits of the city now as well, which I've just recently inherited. So so yeah, gonna kind of whiz through this today with you guys, and obviously if you've got any questions as we go, then feel free to. There is a little chat box down the bottom there, so I'm assuming I can check that as well at the end whilst we go through. So most of you will be aware of this. Some of you might not be, but the back end of 2019, Precise merged with the One Savings Bank group. So when you see OSB, that stands for One Savings Bank. So within that, we've got 3 brands. So you've got Precise, which was formerly Precise Mortgages. So keeping it very simple now. So we've got Precise, Kent Reliance, and I also support on that brand as well. I am going to be focusing just on Precise today. So yeah, if anyone's got any sort of burning Kent questions, you can always ask me at another time. And we've also got Interbay. We do have a separate BDM for Interbay, and that's kind of our commercial, semi-commercial arm. So we can help clients, that range from, first-time landlords, first-time buyers, right through to the really complex stuff, which is like your large multi-unit blocks, HMOs, short-term finance. We've absolutely smashed it actually across the bridging range over the last sort of 12 to 24 months at Precise, and also Interbay can help with your even more complex bridging inquiries. Again, we've now actually we've done so well on the bridging side, we've actually got a separate BDM as well that looks after the bridging. So as I said, today just going to be focusing more on the kind of the term deal stuff with you. So although we don't, we are a specialist lender, Precise and Kent, we are specialist lenders. We don't necessarily compete with the high street, but when it comes to residential, we act as a stepping stone, really, in most cases, to get the client back to the high street. So it might not be that they've got kind of big issues, shall we say? So, but it might be that, as I said, they either might not have a lot of credit. They might have built up a bit of unsecured credit in the background. They might just have complex self-employed needs, issues with affordability with the high street. When it comes to buy-to-let, because of the nature of the type of business that we do, we might actually sometimes, a lot of the clients that we see have been with us for, the journey of the mortgage. So some of those clients might actually end up staying with us, particularly if it's kind of limited company. As I said, some of the large portfolio landlords, which we've seen a really, really big increase in over the last sort of 12 to 24 months, I'd say. Buy-to-let the landscape certainly has changed from what we've seen. I suppose your mate down the pub, buying a property down the road is first buy-to-let. We probably see less of that. But certainly there is a busy market for developers or professional landlords, which probably, it's probably a good thing in a way, because I guess we've seen a better quality of stock or better quality of properties coming on. So probably seeing a lot less sort of rogue landlords, we used to call them. So it's all good. It's all good news. So there's a range of ways that we can help clients. I'm gonna discuss kind of some of the residential slides. So I'm just gonna got this up on my laptop at the same time because my screen is very small there. So I'm gonna bring that up. So there's a number of ways that we can help your clients across the residential range. So a big one is obviously the adverse and how we can support those customers. And then when we say adverse, it might not be, as I was saying earlier, it might not be that your client necessarily has, lots of defaults and CCJs. They might have had some recent blips. They might have built a bit of unsecured debt up and they've got, a high debt to income ratio. Or it might just be that if they're a first-time buyer, they might not have a lot of credit. So we can support on all of these cases. So first-time buyers, affordability is really good with us. We can go up to 5 times income, even at high loan to values. New build houses and flats. So actually we can lend on new build flats right up to 85% loan to value at Precise. As I mentioned earlier, we cater to the clients that need help with kind of complex self-employed needs, which I'll be discussing in a little bit more detail with you shortly. Interest only, we've got some really flexible criteria across that bit of criteria as well. Again, going to cover that off in a bit more detail, but affordability is a lot better with us than it is with the high street. Capital raising purposes, we can be very flexible. You can capital raise for any legal purpose with us, and again, I'll come on to the different things that we see for capital raising reasons. And it is a soft footprint as well, and that's across Precise and Kent Reliance. So going to start by talking about adverse, and it's no surprise really. I mean, we've seen a big rise in adverse lending. Again, no surprise, because the cost of living, people's mortgage payments have doubled, tripled in some cases. So again, it might be that those clients just need a little bit of support until that they can get themselves back to the high street again, or have a lender that can take a view and maybe look at again, interest only options to give them a bit of or part and part options to give them a bit of breathing space for the next few years until, you know, maybe their children are out of private education, for example. So I'm going to start by just showing you an example of a tier 5 product. So this is kind of the nearly the worst case scenario of the type of adverse. We do actually have products for applicants that are currently on a debt management plan. Oh, sorry, I've just realised I didn't move on my phone the slide. Sorry, guys. So we've got products for clients that have been on a debt management plan in the last 3 years, or they might be currently on a debt management plan. But let's just say that that's not the case, but they have, you know, got themselves in a little bit of trouble. We've also launched as tier 0 product at Precise. So we've now got a range of 6 products just on our normal residential range. So tier 0, it might be clients where they've just got, it could even be simple as a recent blip, maybe a missed payment on, you know, unsecured debt. Again, maybe they've got maybe a little bit of debt in the background. So, but for tier 5, this is kind of, again, like the worst case scenario and the kind of normal range of products that we offer. On those deals, we can accept up to 5 registered defaults and 3 registered CCJs in a 2-year period. And actually, it's really important to mention on this that we don't care if and when that default or CCJ is satisfied. And actually, in a lot of cases, we might see clients where they've got a big default or a CCJ that's registered 5 years ago, or they might think, well, that's going to drop off soon anyway. I don't really want to have to satisfy that. And probably the most high street lenders will have that in their criteria, whereas with us, if it's registered over 2 years ago, we just simply ignore it. Missed mortgage payments, I still think there's worse to come. I think a lot of people still are, you know, on their low rates and still kind of gradually coming off those. But we work off the worst status of any secured missed payment. So when we say that, it's how many consecutive missed payments have you got as opposed to how many. So I suppose the high street lenders would look at this and say, you know, if they see on the credit report, it says a 10101, they would just say, well, that's 3 missed payments there. We would look at that and just say, well, it's never gone over a 1 on the credit report. So as long as it doesn't go over 1 in 12 months or 3 in a 3-year period, we can help support. Unsecured arrears, we don't count them. And actually, that's a really good bit of our policy. Although we don't count them, they do affect the product that we offer. And because we do credit score at Precise, and the reason we do that is, you know, it might be that we do see a client where they've got a lot of missed payments on unsecured debt that's quite recent. So, you know, they've got a worst status 5 on a credit card in the last 12 months. They're still deemed to be quite high risk. We will lend to that customer, but you know, it's unlikely we're going to offer them a kind of tier 0 or a tier 1 product. They probably will fall into one of our more, our more expensive products. For those that have actually had a look at the product guide, we are I'd say we're pretty competitive on residential at the moment. We've got low fees, fees up to 995, offer cashback on and refund of VAL on some of our products. But when you look at the type of adverse that we can take, you know, when you're looking at rates within the 6s and the 7s, you think, well, actually, you know, we're not that far off the high street, and our lowest rate at the moment is about 5.19 on a residential deal. Cool. So as I mentioned before, we can be very flexible for capital raising purposes. It can technically be for any legal purpose. So home improvements, buying an investment property, debt consolidation, they're all the kind of standard reasons for capital raising. And actually, you know, if they're buying another buy-to-let or, you know, doing home improvements, we don't tend to need to see any of that detail up front. So they can go and we give them the cash and they can go out and they can find that buy-to-let property. We can also lend for business purposes. Now, although we do lend for business purposes, we don't tend to like it if it's for a speculative business. So if it's, say, for yourselves, you want to just a cash injection into, you know, your mortgage business, that's the type of business purposes we're more comfortable with. So paying back directors' loans, don't tend to have a problem with that. We've even done tax bills as well. So corporation tax or inheritance tax bills we tend to be fine with. If it's any other tax bills, you're probably best to speak to myself, your BDM, or Jason Christopher. He's the telephone BDM. Well, actually, saying that, actually, some of you might not be based in my area. So if you go onto the BDM finder, sorry, on our website, you can see who your nearest BDM is, or your local BDM. But do that before you throw in any of those deals, because it's worth having a conversation prior to that. So again, there's many reasons why you'll use us over the high street, and there's the obvious ones like, you know, adverse, you know, buy-to-lets, complex deals. But more and more now, I'm getting asked around questions from brokers around gambling on bank statements, payday loans. That's a big one. We've seen a big rise in Klarna as well. So, you know, paying 3 installments. I don't think anyone thought that was going to be an issue, but again, it seems like the high street are becoming quite wise to this, and in a lot of cases not feeling comfortable, particularly where it's high loan to value, you've got first-time buyers. Now, we are, you know, we view this quite differently so than the high street lenders, which is the reason why you would come to us, and we want to still help support those customers. So things like payday loans, gambling, it's certainly not a no. I would say if we're seeing a lot of that on their most recent bank statement, you know, again, it all depends on the client's income, what levels that we're seeing. Certainly if someone's gambling, you know, half of their income away, it could be an issue, but a bit of light gambling isn't always a problem with us. Repossessions, bankruptcies, if it's over 6 years ago, we can consider that. And I was saying about account conduct, we generally will ask for the last 3 months bank statements, but as I said, you know, where clients might be using their overdraft, with a reasonable explanation from the broker and having a good conversation with the client, you know, we can still support those clients. Self-employed. So again, I've kind of mentioned this a few times already. And again, a lot of you might know this. We do a lot of lending for clients where they need help, whether they're self-employed, they've got 1 year's trading. So that's a big one. It might be that the client has a pure 1 year's account. So it could have been that they were a gardener and they've come to be a mortgage broker. We can support those customers. It might be that they have been trading for 2-3 years, but first year they had setting up costs of the business, which is obviously quite common. It might have been that they actually had a loss in the first year, which again is not uncommon for someone who's just started a business. But let's just say their income was very low in the first year, and actually this year they've had a really big jump in the income. So our default position is that we work off their latest year's trading figures. It's really important to point out, though, if we're going to use their latest year's trading figures, the broker has to, you have to be able to validate that income. So, they might have declared 60 grand income on their tax calcs and overviews, but it's all about sustainability and what we can see going forward. So generally we'll say, give us the last 3 months bank statements. We want to be able to see income on there. As we all know, some people's professions, their income might be quite seasonal, or if they might be working consultancy, they might have had a big contract 3 months ago, and if their income's a bit more sporadic, then fine. It's up to the broker then to tell us this, and rather than just letting the underwriter sort of dig around and kind of claw that information, add notes to the case, explain that. I'd say for a self-employed case, it's always worth just adding notes anyway at the beginning. It's important for you to kind of know your customers, go through bank statements, which most of you do, I'm sure. But as I said, it's really important to give the client that guidance as well, because if they come approach you and you can sort of see that the last 3 months bank statements, there's very little income on there, that's probably a conversation worth mentioning. So for limited company directors, we work off their salary and dividends as standard. Kent Reliant, it's worth just pointing out, I know we're kind of focusing on Precise today, but with Kent Reliant, we can work off the client's net profits as an exception. And with us, we do large loans at Kent, and that's why brokers will use us. Precise, we still have very flexible affordability. We can still support those with large loans, but if you need that extra little bit of support or an income stretch for someone who's self-employed, we can have those. You can have those discussions with your BDM at Kent Reliant, and we can put that deal in front of the underwriter. The big difference between both the brands, and I probably maybe should have mentioned this earlier, is that with Precise, we are a very black and white lender. With so if you've got something that doesn't quite fit policy, there isn't really a lot of point of coming to us for those deals. That's where the Kent Reliance brand comes in, because as I said, it's a complete manual underwriting approach that we have. So coming back to self-employed criteria again. So here we go. So directors' pension contributions, we can add those back into the income. And also car allowance as well. We don't see that as often, but we can add those back in. So it is quite, it's also worth mentioning that across both brands, Precise and Kent, we do lend a hell of a lot more borrowing on a 5-year fixed. So, if the client, if affordability doesn't fit on a 2-year, there is always that option. And the pricing, there's not a huge difference in both the product ranges at the moment. Coming on to interest only, and as I highlighted earlier, we're really, really good at interest only, I have to say. And the reason, the kind of the biggest reason for that is flexible criteria, but also you will get a hell of a lot more borrowing out of us than you will the high street, because we work off an interest only affordability. So that's why we can help some clients that might be a little bit older. So let's say you've got clients, in their 60s. Well, that if you look at it, you think, well, he's got a 400 grand mortgage, he's only going to have a 13-year term. Well, in a lot of cases for those deals, if it's repayment, it's just not going to fit. Obviously, you'll need to do, we need to still do our affordability model, but affordability is really, really competitive with us. So if they're looking at a pure interest only deal, we can lend up to 65% loan to value, or we can offer part and part, so 50% interest only and the additional 25% on repayment. We will allow customers to take the age right up to their 75, should we say, if they've got non-manual jobs. So on earned income, no questions asked really. There is no minimum income for that. We don't have a minimum income. They need 150 grand equity, which is fairly low when you look at the overall market. Downsizing as a repayment vehicle is acceptable to us as well. So it's always worth, as I said, if you get those deals, it's always worth having a look at our affordability or speaking to your local BDM or Tony. HMOs and multi-unit blocks. So coming on to the buy-to-let criteria now. So we can cater to experienced landlords. I mean, we don't even have a limit on background buy-to-let. So we get clients where they might have, you know, hundreds of properties in the background, but right through to, you know, your first time landlord just looking at buying their first property. So they don't need to be owner occupiers with us. They don't need to live and own their residential, but they do need to have a property in the background. So they've got, might be living with mum and dad, but they've just got a, you know, a buy-to-let. That's absolutely fine. For HMOs, we can lend on properties that have up to 6 bedrooms. 6 bedrooms. What I would pick up on, or what I'd like to mention around that now, if you do have any HMO properties, it is worth always asking what the configuration is. We've seen a really big rise in HMO activity over the last, you know, 12 to 24 months, not surprisingly, because of the yields. However, what we have also seen a lot of landlords doing is what we call over adapting the properties. So rather than having your standard 6 bedroom property, they might put little en suites in the room. Please do, you know, if you're, you know, speak to Tony and the guys at the team to have a discussion around those, because a lot of those deals will be better off with an investment valuation, and they would need to really go to Kent Reliance. Maximum age application is 80, and we can do a 35-year term for those customers. We lend on, as I said, multi-unit blocks up to 6 flats on 1 freehold. Each individual flat needs to be a minimum of 30 square meters, and all the utilities must be separate. So essentially, each individual flat needs to have good saleability in its own right. And in terms of HMO licensing, we just need to see that they've applied for an HMO license by completion. So we don't expect them to have it in place. So they might have a standard buy-to-let property at the moment and want to convert that to an HMO, so they just need to put fire doors, etc. We can still go and value that property as an HMO on an HMO rental. So I'm running out of time here, guys. I'm just going to whiz through a quick hit slide on buy-to-let. Some of this I've already covered off with you. But top slicing is another one that we can offer at Precise. It is only available on purchases now, not remortgages. My advice is we would always need you to go and do an AIP to check the affordability. The calculator on the website is pretty useless. I'm going to be completely honest with you. With top slicing, we have to take into account the residential mortgage in the background and all commitments. That calculator will be updated soon because we're going through modernisation projects at the moment. So the best way to check whether it's going to fit and eligibility is, again, just by doing a full AIP, which, as I said before, is a soft footprint. So flats, we can lend on flats up to 20 stories. 20 stories. Bespoke ICR, tenants in common. So we do have a flexible ICR for anybody who is a low rate taxpayer, or if the gross rent and earned income is under 50 grand a year, they can benefit from 125% ICR, even on a personal name buy-to-let. But we do work off pay rate on a 5-year fixed deal. So affordability, again, is great with us on a buy-to-let deal. Directors' loans as deposits, absolutely fine with us as well. You was again seeing more of that, so it's tax efficient for clients not to draw the money out of the business, but to do the intercompany loan from, say, their trading business directly to the SPV. So we can do that as well. I think we're at the end. So sorry, I ran over a little bit there. I was kind of trying to whiz through everything, but I think we've got a few questions in here now.
I'll ask you the questions, otherwise I'm completely redundant.
Yeah. Thanks, Tony.
I've only got one job, basically.
Oh, lovely. We didn't cover that off on our practice run the other day on the questions side on the chat box. I wasn't sure if you wanted me to cover that off.
No, I'll ask them. So
lovely.
Paul has asked, is there an affordability calculation on your website? We know there is, but you said it's rubbish. So that's been upgraded.
It's only for top slicing. So okay. Top slicing. But for standard buy-to-lets, yes, we've got a calculation, obviously residential as well, and a bridging calculator as well, if you've got any of that type of business.
Terence has asked, do you have SPV options?
We do indeed. So we lend to limited company directors, and in a personal name. We can have up to 4 directors and shareholders on the application. We're not too worried about the shareholding, again, across each of the directors or shareholders. In fact, directors don't even need to have shares, but all director shareholders still do need to be underwritten.
Okay. Important thing is, if it is an SPV, it's got the right SIC code. There's 3 SIC codes they accept. I'm trying for the life to remember what they are.
We've changed that now, Tony.
Ooh.
We don't have any set SIC codes now, guys. They just need to be property-related businesses, property-related SIC codes, shall I say, and they need to be non-trading businesses, so we don't lend to trading businesses.
Excellent. Okay, well, there you go. I've learned something today, because Precise didn't tell me that. So there you go.
It changed only a few months ago, actually, Tony.
Okay.
So.
Staff probably know it. I just don't know it. So there you go. Paul has asked, do you lend on a property near a factory and shops?
We do. So we lend above commercial, but we still like properties that have got quite good saleability. So we do get properties sometimes where there's a lot of commercial, like almost got a feeling that it's like near an industrial estate. We don't lend on those types of properties. If it's above commercial, yes, we can consider that, as long as it's nothing noisy or smelly below. I would always do a bit of a 180 as well. Check that there's no pubs directly across the road. So pubs tend to be a no-no. Obviously the obvious ones, laundrettes, restaurants, things like that below.
Okay. Owen has asked, where do you lend?
So we lend in Scotland and the UK, but in Scotland we only have specific postcodes that we lend. So a lot of the big cities we lend in, but there's only about eight postcodes in Scotland.
Okay. And you're not lending in Northern Ireland, are you?
We aren't.
I'm asking that as a question, just in case it's been changed and I've not been told. That's all.
No, still no.
Okay. Russell has asked, are you good with a holding company with mirror directors, shareholders being the owner of an SPV? So
we don't at Precise, but that is another reason to use Kent Reliance. So Kent Reliance, we are fine with layered companies. We don't lend to a trading business at Kent, but complex SPV structures is a big reason why brokers come to us at Kent, and we only underwrite directors there, not shareholders.
Okay. One last question. Paul was asked, are you happy with intercompany deposits?
Yes. So as I mentioned before, we are fine with intercompany loans and deposits. And a bit of a top tip before we're finishing off, you don't need to have a monthly repayment to that loan that forms the deposit. And if you do, we do deduct that off the rent. So best way to set it up is to say that the loan will be repayable at the end of the mortgage term, so it doesn't affect the rent. But you also need, whoever's the majority shareholder on the SPV needs to be the majority shareholder on the trading business that's going to be facilitating the loan. That's a big one.
Perfect. We'll actually ask one more question because I want to know the answer. Do you allow gifted equity?
We do at Kent Reliance, but not at Precise.
Excellent. Okay. Amanda, thank you so much.
Thank you very much.
Lovely to see you again. You will also be getting your name plaque on the wall behind me. There you go. You can see.
Lovely. Thank you.
Lovely new logo, which will stand out, no doubt, more than any of the others. So yeah, get an appointment to come and see us in our new office as soon as you can. Simon will remove you from the room, but thanks once again. And
thank you very much. Enjoy the rest of your week. Take care.
Cheers.
Bye.
So here we go. We're going to crack on. Next speaker is Tony Grillo from Together. We are one of their packager partners. I'm very pleased to be so. And you would have received this. He's going to be talking about their second charge product today, which Tony knows very well. It's probably his specialist subject on Mastermind, I would imagine, should he ever go on there. And a little bit about Tony. He's worked in specialist lending industry for over 20 years. In this time, he's undertaken a variety of roles from underwriting to internal sales through to his current position in business development. Tony has a broad range of experience and knowledge given the time he's spent working for lenders, packagers and brokers. This has allowed him to provide his introducers with both product and market assistance. Tony is a Watford FC season ticket holder. Someone has to be. And in his spare time, he enjoys watching them play and spending time with his wife and 2 children. And Tony, I'm sorry for the next slide. Claim to fame, Tony is recently qualified as a narrowboat helmsman. And that's a picture of Tony on the weekends sitting on Captain Birdseye's shoulder. There you go. But when did you? I actually live on the canal, so can I expect to see you sort of like sailing past with a pipe in your mouth?
once a year you will see me go past with my son's Scouts troop. That's the reason I have the license to help out the Scouts.
I'm with you. Right. Okay.
I'll wave.
Yeah, please. I won't wave back. Okay. Nice one. All right. You've got your usual 20 minutes. I think you normally fly through these. So do what you can. Get me some time back. And I'll see you shortly.
Thank you.
All yours.
Thank you very much. So, thank you for having me, guys. Really appreciate it. It's actually a really opportune time for me to be doing this presentation, because I don't know whether, I doubt Tony's seen his email, but there's an email gone out with some very good rate reductions across our regulated product range, being first, seconds, consumer buy-to-lets. Obviously here to talk about the seconds today, but so it's a really great time for a bit of a relaunch on the on Together's regulated products. So looking forward to running through this with you guys. Obviously, throw any questions into the chat, and we'll pick those up at the end. So I'm Tony Grillo. I'm now an intermediary sales manager, not a BDM. Not sure why they've changed it. I think we're just across the business refreshed our job titles, so we've all got similar job titles, but I work on the regulated and unregulated side of the businesses now, so I'm here to talk about Together and our regulated second charge proposition. Most of you will probably know a reasonable amount about Together. We've been around, as it says on here, 50 years, so most people are aware of kind of what we are, what we do. I think a lot of people tend to have a bit of a not necessarily the right idea of where Together is today in terms of products and what we do. And that's the point of having these sessions, is to just refresh and pitch us where we see ourselves today. We've got a significant loan book. We're the largest non-bank lender in the UK, with a book of over £7 billion now, closer to 700 colleagues within the group business. So a large business now. We like to think we take a common sense approach to a lending. None of this computer says yes or no. It will be a human being based up in Manchester that says yes or no. We have flexible lending criteria. I am often heard saying, and Tony will have probably heard me say this, that I might as well shred the criteria book sometimes, because we just happen to we do things that the criteria book says we won't. We can just take a view because of the way we fund, because we're a single director or a single shareholder owner. We can make decisions on what we do with our money. So we can look at a deal and make a common sense approach to whether we lend to that client or that entity or not. We do auction, bridging, buy-to-let, commercial development, basically everything, and going all the way down to second charges. We have a product that will suit most clients in most scenarios. Always use this slide just to give you a bit of a gauge for where I see us with being at Together. Most people tend to pigeonhole us in this little diagram here into the bad credit and terrible property category. Yes, we do offer lending to clients, which I'll come on to, for those that have got less than perfect credit and properties that that other lenders won't necessarily lend upon. Examples being from Amanda on the previous presentation, properties next to pubs and properties above takeaways and all of that. We're happy to lend on those types of property where other lenders won't. So that's kind of where we fit in there. But for me, the type of income and the type of client and the type of transaction we're looking at, that's where we sort of define ourselves a lot more these days. But sort of bolt that onto the credit and the type of property, we become quite a compelling proposition. I think a lot of brokers tend to think of us as a lender of last resort. I'd like to be thought more, maybe not the first lender you go to, but absolutely in the pack of lenders where we're considered earlier on, because we've got a lot of lending solutions to help clients that are what might be perceived as high street clients. So I'm going to talk about our residential second charge solutions. So the type of transaction, we can 100% capital raise for debt consolidation. We'll do that, in many ways. We're very happy to do large scale debt consolidation where other lenders may get a little bit nervy. Joint borrower, sole proprietor transactions. You don't necessarily, we can have parents and other family members as a potential borrower on the application. They don't need to be resident in the property. We can look at that, as the next line alludes to. We can have up to 4 applicants. So we can be very flexible in terms of the way that we look at the structure of the deal, at the way the deal's put on our system. As you say, not all applicants need to live in the residence. We can look at non-resident applicants as well to help support that application, perhaps even support affordability. We offer true interest only, and it's affordability based on interest only payment, and there's no stressing there. There's no minimum equity or income for interest only. We're very flexible in terms of the way that we look at the premise of the deal. Terms up to 30 years for second charge. We can do simultaneous second charge transactions. So where somebody's looking to perhaps do a purchase and can't quite pull out enough on the first charge on the purchase, we can look to do a simultaneous second charge to obviously simultaneously complete to allow that purchase to happen, where we can perhaps leverage a little bit more out day one for the borrower. Bearing in mind, we are a lot more flexible in terms of the way we assess affordability. Any legal purpose considered, tax bills, home improvements are key ones. But as long as there's a legal reason why they're borrowing the money, we will look to consider it, and we can take a view if we're given a story. And this is the importance of speaking to our trusted partners like Tony and the team, where they can put a case together and place it forwards to myself and one of the team, and we can take a view on it. Give us the positives, give us all the benefits. Give us the stuff that sits underneath that may cause us an issue, but give us the whole story, and we'll make a decision on a deal, very, very quickly. And it's a medium-term solution, obviously protecting current rates and where we are at the moment. Anybody sitting, I'm teaching you to suck eggs here, but anyone's still sitting there in a 5-year fix that they took out a couple of 3 years ago before the world went crazy rate-wise, they're absolutely going to not want to touch that rate and refinance onto a first charge with rates where they are at the moment. So it's a fantastic solution at the moment. Credit. So we offer lending to those with no credit history or those with less than perfect credit history. Those with no credit history are probably more sort of relating to our first charge proposition. But what we're saying there is somebody that's got a low credit score. We're not a credit scoring lender. We will look at individuals and situations on their individual, on their own individual merits. We don't care what their score is. We're not too worried if they've got a bit of a sketchy payment profile. As long as they're going in the right direction now and everything's not diving off a cliff, we can make a decision on a deal and say, do you know what, these guys, we can help them. We can get them out of that pickle they're in. They may have a credit score what might be perceived as artificially low or low for the reason that they're overexposed on their credit cards. They're above, certainly 20, 30. If they get above 50% credit card exposure, credit scores affected adversely. So we can get them into a position where they can refinance that, get rid of that debt into the mortgage 2 or 3 years down the line, which is the typical sort of life cycle of a second charge, 18 months to 3 years, and hopefully get them back onto a high street product, or refinance that back onto a first charge. We've got a product waterfall which reflects their status from our prime plus through to prime, which will allow up to 2 to 3 units of adverse in the last 12 months. But bearing in mind what we class as adverse may be slightly different to other lenders. So we're quite sort of, we only really look at CCJ's defaults and mortgage arrears in the last 12 months. Missed payments on unsecured debt, as long as it's not sort of pointing to a wider problem, we don't really take much notice of that. We'll just look at, if everything's running off a cliff now, we may have some further questions and may want to understand that we are lending correctly at that point. But we are very sort of sympathetic to those situations and can make decisions very quickly. And bearing in mind, like I say, we don't credit score. So it's not in computer says no. We will look and take a pragmatic view of the case. And we are, not that you see that, I mean, we're probably getting to the point where I may remove this from the presentation going forward, but payday loans, we're happy to consider clients that have got payday loans, even with one in the last 12 months where we're quite happy, or 3 in the last 12, 1 currently. I don't remember, and Tony will probably back me up in the team, but I don't remember the last time I've seen somebody with a payday loan. I think they're kind of old hat and probably disappearing down the hatch that they probably should be going down. But nonetheless, if we've got clients that's got a history of them, we're not going to be too put off by those. Income, this is where we make a big difference from it. This is a massive area for us where we win an awful lot of business. No minimum income requirements. Now, when I worked in Packager World, this one used to drive me insane when a lender would come in and say to us, we have no minimum income requirements. So my question will always be, okay, so what does that actually mean? Quite often you'll then get the response, well, what it means is £12,500 for a single application, 15 to 18 for a joint application. We don't have any of those. If they earn £5,000 a year each as a joint application and it fits on our loan to income requirements, we're happy with that. Not got a problem with low income. So no minimum income requirements in any way, shape or form. No LTI restrictions. So we've got an unlimited LTI calculation. So no income multiples, no debt to income, no crazy sort of equations in the background. It's a full income and expenditure calculation, and it's assessed on their affordability. What comes in, what goes out, and can they afford it? So we are very, very, very flexible there. I see deals that get funded that probably, if you were to work out an income multiples, are probably 7, 8, 9, 10 times income multiples, if we can make the affordability work, if we can make a sensible lending decision, and that we're putting the client in a better position. We just have to rationalise every decision we make. We have what we call a declared and stated expenditure model. So our first port of call with regards to affordability are the ONS stats. Now, as I think Tony tells a story normally of, I think it's mobile phone providers in Newcastle are quoted more on the ONS stats than somebody in other parts of the country. So the ONS stats are really weird and wonky, and often aren't reflective of actually people's true situation. So if it fails on the ONS stats, we will look at our declared stated expenditure, which we will run through an I&E, or you, the guys, Tony and the team would run for a full I&E with the client and with yourselves, telling us what they spend on each element, whether you have mobile phones, food, cars, insurance, etc. Like so, we can translate that direct from their bank statements, and that will give a much truer reflection of their affordability situation. And that will often mean a case that fails quite wildly on the ONS stats passes reasonably comfortably, and quite comfortably in many cases, on our declared and stated expenditure model. Real highlight here for me is self-employed. We only require 12 months trading history. Many, and if not most other lenders want 24 months. But we are happy, as long as they've been self-employed for 12 months, we're happy to accept them as a self-employed client. We do not want to see accounts. What we want to see really is an accountant's certificate. That for us is the best way to demonstrate a self-employed client's income. We can look at SA 302s and tax calculators, but we would much rather see an accountant's certificate, bearing in mind the client doesn't need to have employed that accountant on a retained basis. They can get an accountant of their choice to review their books, their tax calcs, etc., their SA 302s, and give a one-off snapshot on the client's income situation and give us their total net income. We can use projections, and we can potentially use retained profits as well. So we can look at, if they've had a couple of years where, certainly more when we've been coming out of COVID, we're probably away from that one now. But if we've got a good year coming up, and the accountant can put a justification that the business is expanding, and this current year is going to be a great year for them, and going forward it's going to be great because they've expanded the business, we can look at the projected income for this current year, as long as we're 6 months into that year. But that gives us the option to potentially use a slightly higher income and make affordability better. No minimum time for employed applicants, as long as they tick one of these two boxes. 12 months continuous employment, so they could have had 2 or 3 jobs in the past year, but as long as they haven't got more than a week or 2 or 3 in between jobs, as long as they've got continual employment for the past 12 months or 6 months in their current role, and they can be in probation, we're more than comfortable to lend to those clients that have got a slightly checkered job history. We're flexible with sources of the income, 100% benefits and 100% pension accepted. So we're very flexible there. Not many lenders would want to lend to clients that purely have benefit-based income. We're happy to consider that, and we see a number of those. The only benefit we don't accept is housing benefit, and I was genuinely asked by somebody once whether we took housing benefit, but I had to say no on that one. But we do not take housing benefit, but every other type of benefit we will consider. We will take 2nd, 3rd, 4th jobs if they have them, as long as there's enough hours in the week. We need to see 3 months minimum for those. But we will look at multiple income sources, multiple job sources. As I say, as long as we can rationalise it and work out there's enough hours in the week for them to be doing those jobs, we're happy to accept it. Like I mentioned, we will accept those clients in probationary periods, and we will work with clients that are on short-term and 0-hour contracts, as long as we've got a 6-month history for those types of clients. Property-wise, again, this is another area where we're ultra flexible. No minimum property value, as long as it stacks up with our minimum now £20,000 loan size. No minimum time in property, so we can do a day one refinance potentially, and we can do the simultaneous second charges, as I mentioned earlier. We will lend on properties that are non-standard or perceived as non-standard, so your timber framed, concrete, unlimited high-rise flats, where valuations have come back more so on the first charge side, but we do also see a number on the second charge side where valuers have classed the property as unmortgageable. It might be an ex-local authority flat that's on the 20th floor, and it could, in theory, certainly on a first charge, but it could be low private occupation within that block. In theory, on a first charge, we can be the first one to fund the purchase within a council block, and be 100 flats in a block. We can be the only one that's being financed. But on the second charges, again, low private ownership levels, we're not worried about that. So if you get a Halifax valuation back or another lender valuation saying it's got a nil valuation due to the property type or location, generally worth referring to the guys, but we are normally more than happy to consider those. We may restrict the LTV down a little bit, maybe down by 5-10% or so, but we're happy to look at those. Local authority flats with deck access. Not many lenders tend to like deck access flats. Not sure why, but we're happy with them. Properties with no kitchen and bathrooms. This is great for second charges. So somebody that is towards the end of a renovation of a property, of their own residential house, overspent, as most people tend to do when they renovate their house, don't have enough money left in the pot to do the kitchen and bathroom. As long as we're funding to have these assets put within the property, these things put back in the property, we're very happy to fund those ones. Any number of floors for high-rise flats and maisonettes, as I've mentioned. Poor remarks on valuation, cash valuations. So where a valuer has absolutely annihilated the property on a valuation, generally we can tend to get comfortable. Absolute worst case on any property really is where we'd be at 50% of the cash or 90-day value, but we rarely tend to see those on the regulated side, more so on the unreg side. Get a lot of properties with land. Lent on one, or was looking to lend on one last year that had, I think it was an ex-farm property, an ex-farmhouse, beautiful property, timber framed, thatched roof, 10-12 acres of land, a moat around it. I mean, I'm throwing all of these things at. This is genuinely all on the same. This is not a mixed match of me making. This is a genuine property we looked at. So I had a moat, an additional cottage on the plot that was separately metered for gas and electric and on a separate council tax bill. We were happy to get comfortable with that. So a lot of other lenders run a country mile from it, and semi-commercial. Quite happy to do a regulated semi-commercial property as long as the residential element is 40% or more. Thank you very much. Any questions?
Thank you, Tony. You've got one question, and please don't let me forget the prize draw, because I've been known to do that before. That's actually the next slide. Martin's asked, would you consider foreign nationals?
It depends on what. Yes, as a business we do, more so on the that we need to have permanent rights to reside for a regulated product, or indefinite leave to remain. But we can do we can do foreign nationals, certainly on our unregulated side. Yes, all day, all night, we can do that. But on the regulated side, they would need to have permanent rights to reside or indefinite leave to remain.
Okay. Stephen's asked, right to buy funding.
Yes. 100% of the well, more so on the first charge side, but yes, we will do second charges on referral. Now we need to see the S125 to just ascertain what level of lending we can do, but in theory, up to 70-75% we can do on those. Okay, and if you can put your commercial hat on just for a second, Neil was asked, would you lend against a holiday park? I get many of these each week. Maybe, potentially. It would need to have its own title. If there's a restriction for holiday use only, it would be on our commercial term product as opposed to a buy-to-let type product. But we're probably going to be 50% on those at absolute max if we can do them. Always worth referral. Send them over to Tony and the team. They can get it over and we can have a look at it.
Okay, Jay's our shared ownership.
Yes.
Okay, and Housing Association 30/70. That's the 70% ownership by the Housing Association.
Yeah, we're fine. We're fine with all of those. Okay,
Tony, thank you so much. You've just about got the time back for me. I'm going to have to talk really quick in the last bit, but thank you as always. I've now decided I'm going to be sneezing for the next couple of minutes, so for some reason. But yeah, thanks. Great as always. Come and see us soon. I was actually just going to point out, but I'm about to sneeze again, but Tony came and saw us the week before Easter. And as always happens when someone comes in to see you, think, okay, there's any deals we can go through. We placed a bridging loan together on the Thursday. I can't remember exactly what day it was. The week before Easter, it was the Thursday. Placed it with them that afternoon. It completed the following week for an unregulated bridge. So I know that's also off topic a little bit, but yeah, someone's just come to remind me for prize draw, but I've already done that. Yeah, that's how quickly they can work. They are an excellent lender to have on our books, and we've been obviously together since their previous incarnations as Blemain and Lancashire Mortgage Corporation and everything else. But a great lender to have. Tony, thank you so much.
There's some great news in your inbox with regards to some rate reductions. So that'd be.
I'll read that. So everyone, ignore what you've been sent by email today because it's already out of date. There you go. As is the market pretty much at the moment. Tony, thank you so much. Oh no, hang on, prize draw. I did say I've actually had someone come in to say prize draw. I've had prize draw mentioned on the question thing, and I still almost forgot it. Honestly, I'm turning into me nan. I really am. Right, Tony, could you pick out a number, please, between 1 and 65?
Number 13. Lucky for once.
13.
Yes.
Again, I hope I'm pronouncing this correctly, but I don't think he'll care because Owen O'Hagan of First Call for Mortgages, you just won yourself 100 quid. There you go. Together, we'll be in contact with you to get that arranged. But congratulations. And again, apologies if I actually pronounced your name incorrectly. Some Irish names, unfortunately, I do struggle with. But okay, one of those things. Okay, Tony, thank you so much. I've got some time to get back. So I hope you're able to stop sneezing. We'll see you again soon, mate. All right, Simon will remove you.
And if you could get my plaque on the wall on what you need to get your drill out.
I do. Need to get me laser level out as well. So they're all the way they should be. I'm just going to put the next slides on because I really do have to talk quickly. And now my machine has decided to stop. There we go. No, we don't want to be on thank you for attending. We want to be on that one. There we go. Right, everyone. So I'm going to have to speak quickly on this. I'm doing something a little bit different this time around because we do have something coming up next month that I want to be able to give some feedback on. So I am going to ask this to a little bit of audience participation today. And I'll probably cut out a few slides I'm going to be doing later. So some news for you, first of all. We've been added to Interbay's Select panel. So if any of you deal with Interbay and just deal on their normal products, we're going to have reduced pricing on basically across the board on residential, commercial, semi-commercial, more products if the commercial property has an A to C EPC rating, semi-commercial where the residential value is 55% or more. So all these new products, purpose-built student accommodation products that you won't be able to access directly, minimum loans reduced across the board, holiday let products, 83 semi-exclusive products from Interbay. So next time we've got a case you think Interbay, or of course if you've got a case and you think I don't know where to place it, you know who to call. Family Building Society, we are a packager for Family Building Society. I should also have mentioned earlier on, we're also a packager for Precise. So if you've got any Precise cases, please come to us. I don't know why my lights have just turned off. I have no idea why that's just happened. These aren't at a timer, so I'm hoping we've not had a power cut. I'll get some lights sorted out. If one of my team could just come in and switch the lights on in this office, please. Honestly, I've never had that happen before where the lights have actually gone off. Okay, someone's just doing that. There you go. There's me. Right, so Family Building Society, they've moved a lot of their products over to their semi-exclusive package of products. So there's just an example of 4. You should have received a bulletin fairly recently on that, but they will be available on our website, hopefully this afternoon. Their full range of products actually packaged in a way, because Family Bond Society aren't great at actually getting their products down on a bulletin, like all their products. It's a bit patchy at times. So, but there's some new products there. So anything family, think of us. Castle Trust, if you've got anything that's a light, medium or heavy refurb, this is how I get rid of the many bridging and development lenders that phone me on a weekly basis when they say they're the best thing since sliced bread. And I say, well, can you beat this? 90% below market value purchases. Will you lend to 80% net of the current market value or the BMV value? Will you lend to 75% of GDV, so loan to GDV? And will you fund 100% of build costs? And they invariably say no. And I say, thank you, goodbye. Because this is a product we've got. We were actually the first one to get this product, and one of the very, very few brokers that has now still got this product. So again, you get anything that's on a refurb bridge, this really cannot be beaten out there at the moment. And also, we have just launched an exclusive second charge product, 75% LTV, income calculations that will allow you to complete more business, any amount of adverse accepted, within reason, of course, an excellent earnings potential. If you get anything unusual on the second charge side and you think, I don't know where to place it, this isn't out this is us. Only we've got this. My competitors haven't. So again, give us a call. So I really am rushing through this. I wanted to do a little discussion on mortgage clubs, and I've got a question why there, as you can see. I just wanted to ask, could you just all just say, how many of you use mortgage clubs? When you answer, just type 1 and then yes or no. This is going to be very, very important for something that's coming up. So if you could just do that for me. So if you use a mortgage club, 1 and then yes or no. A few of you just type 1. I need you to type whether it's yes or no. Otherwise, I haven't got the answer. Oh, one of you just type 2. I haven't asked that question yet. Okay, second question. So again, enter 2 and then yes or no. Do you ever call their help desk for guidance? Do you use their help desk? Or do you just use them as a payment route? Okay. Question 3. Do you believe they offer value for money? I'll be very, very surprised if I see anyone say yes on this, by the way. There you go. Oh, there's a yes. Okay. Question 4, controversial. Does the service they offer comply with consumer duties, price and value outcome? There's a lot of not sures there. I'll come on to that in a second. Okay, so this is one of the reasons we're asking this, because I'm going to be speaking to somebody very senior within the marketplace fairly soon regarding mortgage clubs, because this was, there's one more question. What is and this is an open question, what is the main benefit of using a mortgage club to you? Very interesting. Some of the excuse me for wiping my nose, is getting over a cold. Okay. Can continue to answer. This is the reason why. This is a recent completion we had completed 16th of February for 2.437 million. We were paid on the 17th of March, which was over a month later. And the mortgage club, who we'd never contact, and we never contact mortgage clubs to get guidance, because I'll be honest with you, when we have in the past, the information I come out with has been absolute garbage, earned £1,218 for paying us some money. I think that's a bit much. And they paid us late as well. I think that's a little bit too much. I really do. But there's going to be more on that in future shows, because that's an ongoing topic. Because unfortunately, the price and value on a regulated deal for a mortgage club to receive that sort of money from a deal for basically doing nothing at all, the question is going to be asked why, unfortunately. So whether that means a cap on what mortgage clubs can charge or what they can take, that would be good to see. Because let's face it, more money in our pockets is better for us. Rather than having to feed all of the, I call them leeches quite often, because that's what they are. They just basically, they're getting paid for doing absolutely nothing at all most of the time, and it shouldn't be the way. This is actually coming on to the next one I'm going to do, because I mentioned already earlier on that Robert Sinclair is going to be presenting with me next month regarding the next stage, the second stage of implementation of Consumer Duty. And I just want to basically ask some questions on this. Did any of you, and again, at this time, if you can answer A, yes or no, and then B, yes or no, did you watch, question A, did you watch the Simply Biz Compliance Clinic on Monday? To me, I did, and I have never seen something that was as blatant as trying to making it so confusing that it was trying to get people just basically to take on Simply Biz ancillary products from their other companies within the group. I thought it was disgraceful, to be honest with you. I really did. Question B, will you be ready to review and complete your annual assessment of good outcomes by the 31st of July 2024? By the way, these are confidential, so I'm not going to be immediately getting onto the FCA and saying, guess what, so-and-so is not going to have his stuff ready because he's not taking any notice of Consumer Duty. It's just an idea of, I mean, at this one the other day, it was very similar. I can guarantee that a lot of people would say yes, and probably not aware of what's going to be involved when it comes to this, because from what Simply Biz was saying, some of the data you've got to get, you might as well just become a data analyst rather than running your own company and giving advice to mortgage customers. Question C, have you been able to obtain feedback from a significant percentage of clients since the 31st of July 2023? I would expect that to be no, to be honest with you, across the board, because it's one of the things, I mean, I must admit, when I buy something and I'm then asked for feedback, I rarely give it. I only give it if the experience was absolutely, if it was lousy, if it was really bad, or if it was really, really good. And let's face it, most people, their experience is pleasing in what they, if they get a mortgage, yeah, I'm happy with what I got. Was it fantastic? No, I didn't get it in 2 days like I thought I might be able to. Was it really, really bad? No, the broker did the job they were supposed to do, so all good. Question D, do you believe that if you were to follow Consumer Duty to the letter, you would have less time to complete business? And question E, do you believe that implementing Consumer Duty and the work involved before or after the 31st of July 2023 has had a detrimental effect on your mental and physical health? I'll keep those up for a few seconds more, because I would expect that to be yes. I'm going to use my own example of this from last year, where I developed a condition in April that got progressively worse, and then literally immediately after the 31st of July, got incredibly bad, where I eventually ended up in hospital regarding it. And I do put some of that down to the stress of having to complete this nonsense, because these are my opinions. And take what you want from these. Will Consumer Duty stop the you don't have to answer these, by the way. Will Consumer Duty stop the bandit brokers that are still operating within financial services? Ever since I came into this market, there's always been, you always get the brokers that think, okay, well, there's two ways of going on this. I can go down the road of actually doing it properly. I'll go down the road of breaking every rule that there is. And they are few and far between. But it's those ones that earn the money. It's those ones that end up selling their companies and end up lying on a beach somewhere very warm, sipping a pina colada, while the rest of us have to deal with the fallout, which is normally more legislation that's brought onto us. Why is it that when probably 98, 99% of brokers are doing a fantastic job in the UK, are we having to all this legislation coming out just because of the 1% who the FCA should be catching, because we all complain about them and they do absolutely nothing about it? To me, I don't think Consumer Duty is going to stop it, because they will just continue to do it. And will Consumer Duty mean that the very large brokers will do as good a job as the smaller brokers when it comes to ensuring the right outcomes for clients? I know of larger brokers, they don't do a fact find. What they would do is ask a series of questions that will basically, they have a flow chart that will drive a client to a particular lender. And it's very clever what they've done, but I personally believe it is immoral. It really is. But they're getting away with it, and they will continue to get away with it, because the FCA, to me, really is focusing on the wrong things here. And is Consumer Duty a way of driving more brokers out of financial services so more clients go directly to the big banks that will eventually employ the director of the FCA? I can't answer that because I can't see into the future. But if you've got a spare 10 minutes at some stage, just Google how many ex-FSA and FCA directors have gone to work for the very companies that they have been regulating for some years, and look at the salaries they went move to. It is disgraceful, absolutely disgraceful. And that's something that really has to stop. So is Consumer Duty going to be a benefit to customers? Do customers realise if they're vulnerable? I spoke to an elderly lady a while back and I said, we have to treat you as a vulnerable customer. She said, why? Why am I vulnerable? Nothing wrong with me. I might be 70 odd years old, but my mind's probably sharper than yours. And she was right. But got to treat her as vulnerable because of her age. Because apparently when you get to a certain age, you don't know what you're doing. Well, it might be the case for me fairly soon, but it's, to me, I sometimes look at this, we're regulated by people who've never done the job. And how the hell can you do that? You really can't. Anyway, about Specialist Hub. This is what we do. And I'm going to be quick. Our service, packaged or introduced only. You choose who actually gives the advice to the customer. If you want us to give it, then we're more than happy to. If you want to package it, as long as we believe, this is the big thing here, as long as we believe you've got the experience to do so. I did have somebody the other day who said, I've got no experience in commercial mortgages whatsoever, but I'd like to send cases over you and give the advice to the client. And I know straight away that is going to be a torturous task, because we are basically teaching that person on the job how to deal with commercial finance. And they have no knowledge at all of it, of what's involved. They offer pensions. And it's not going to work. But you choose. If you do know what you're doing, you choose. Why are we different? It's not the products we offer. Pretty much, other than the semi-exclusives we offer the same as everybody else. Our lender relationship's absolutely key. I'll give Together as an example. I've known the directors, I've known the owner of Together and the directors at Together, and the main directors, the ones that have been there a long time, since the 80s. By Christ, does that make a difference when it comes to actually getting deals over the line sometimes? Because these are people I've grown up with in the industry. I've known these people since I was in my 20s. I'm now in my 60s. And it makes a huge difference. It really does. It's why we're different. It's the people we employ. Everybody that works for me has at least 5 years experience in the industry. Some of you run the office will now be speaking to my younger son, who picks the phone up. He's actually been working. He's been on the payroll since he was 15. He's now 26. But he doesn't deal with cases. He's there purely to pick up the phone. Everybody else has got at least 5 years experience in the industry. My staff are mature life experience, absolutely key. You don't want to be your clients being spoken to by somebody who's been doing the job for 18 months. You want them spoken to by someone who does the job properly and knows how to deal with things. If things do go wrong, they know how to deal with it because they recognize it early. They don't brush it under the carpet because they're not scared of being told off or not scared of losing their job or something like that. They deal with it properly. Why are we different? It's not our numerous awards in the financial press. I will never win an award from the financial press. I can guarantee it because I will never put myself up for one. And if someone did put me up for one, I wouldn't turn up to the awards do because I'm not interested. And this isn't actually anything to do with why we're different. But is anyone else absolutely sick to death? I mean, I'm being inundated with vote for me, vote for us, vote for this, vote for that. It must be award season from people I've never met, lenders I've never used. Why? But they could be winning that award because people are just voting for them and get rid of them, possibly. To me, it's an absolute joke, the award system in this country within financial services. It really is. Yes, some awards are justified. If any of you won an award out there, I'm sure you absolutely justified in winning that. But when I do go to the very few awards dues I go to and someone wins an award for something and you think they've just won an Oscar because they're dancing up to the stage and waving it around her, I couldn't care less. I really couldn't. To me, it's just absolute nonsense. What else can we offer? One underwriter from start to finish, always very, very key because you don't want to be dealing with different departments throughout the process. Commission paid immediately on loan completion, very, very important. Not 1 month and 1 day later, like we was recently paid by the Mortgage Club. So if you do come to us on a case and we package it for you, then quite simply, we can have as little or as much involvement as you like. You get paid the same, but you will get paid on the day it completes, which is actually fairly key. No commission clawbacks unless it turns out to be fraud or unless the client cancels the agreement within any given period, which is fairly normal, but we don't claw back commissions. The other thing we offer is that we gave up with the sourcing systems other than first charges because it will be too much to actually be involved in, and all our other products, which is second charges, bridging, commercial and specialist buy to let. We've developed our own sourcing systems, as you can see from the names there. And that works fantastically for us. You give my team a call and give them very brief details, and within literally 90 seconds, you can have a AIP on your email PDF, of exactly what's available, anything up to 4 different products. And that works incredibly well for us. It just cuts out the time we have to take working out manually whether a deal fits or going to lender calculators. It does it all for us and includes loads of lenders you won't find on those sourcing systems, the Mortgage Brains, the Trigold, 27 Text. So again, that for us is a major advantage, and for you as well if you're using us. Our products, we regulated mortgages, everything basically except for equity release, which I won't touch, but anything else. And we're also now offering probate loans. Anyone that's named in a will and wants to get their money out a bit quick, we can now offer probate loans, which is very useful for some people because they can't get their money quick enough to do what they need. Some feedback. This is where I take a drink. So you don't have to read it all, but I take a quick drink. This is what Tom said about our team for a deal we completed just before Christmas, a review on Trustpilot. And this was for somebody who had never been involved in any form of, I believe this was a bridge from what I remember. So, and I'll come off that now because we are running out of time a little bit. What slide are we on? Yeah, we should be fine. Want to submit a case, complete the feed. When you get the feedback form, there's the very last question is if you want to discuss a case, put it on there and my team will give you a call. You can also complete a decision in principle form that we've sent you. There is one for every product. Go to our website, specialisthub.co.uk. You can submit inquiries online for all the products that we offer. And alternatively, just pick up the phone and give us a call on the 0800 number or the other number we've got. It's entirely up to you. Team ready to take your call. Please follow Specialist Hub on LinkedIn. It'd be very, very good if you could. Your feed will not be inundated with loads of nonsense. It just keeps you up to date with what's going on. When new products come out, you'll see them obviously on our page. But if you could follow us, that would be great. Thank you very much for those that do. Next Specialist Mortgage Web Show is a mini SMWS next month, which involves Dudley talking about regulated first charges. Roma will be talking about bridging. And HTB will be talking about specialist buy-to-lets and semi-commercial. And our future dates, as you can see, June, July, August, September, October, November. You can register for as many as you like, entirely up to you. But we obviously always delighted to see you attend as many as you possible, and you get CPD for everyone. And there's always different lenders on as well, talking about different products. That's the thing. We don't have 4 lenders talking about bridging, 4 lenders talking about commercial, because it will be pretty dull, let's face it. Our Sutton, the specialist, coming up. We're still trying to sort out some dates, but we've only just got Robert Sinclair tied down, a very busy man tied down for May. But we will have Simon Knight, who's CEO of Lenco, but also the former CEO, those of you that go back a bit, of GMAC RFC, who you'll no doubt remember. Josh Knight, who's the Sales and Marketing Director of Octane Capital. And Roger Morris, who I mentioned earlier on, has just been made redundant from Tandem, but will be cropping up somewhere. A lender to be announced. We're not sure who yet, but looking forward. And Roger's always been very involved in our shows, one of the best presenters in the business. And also Anna Lewis, Commercial Director of Castle Trust, plus one other that's to be announced soon. As you can tell, that is a lady presenter, not a heavy rocker. So hopefully she will be announced very, very soon. Once we've got her to agree, she will agree, won't be a problem. But that's all coming up. So again, all this is there. It's training for you, just to increase your knowledge and hopefully think of us when a deal comes up and you think, okay, what do I do with this? I'm a bit stuck on this. Feedback and giveaways. So very, very soon you will see that an orange box appear. Don't click on it yet, which you can click on. That will take you to leave the feedback and also download anything you want to download, whether it's the product and commission and prop fee guide, whether it's the compliance, whether you want to see any previous shows. There you go. It's just arrived. Don't click on it yet. Okay, just you can use that, and everything is pretty much there. You can register for other shows, do whatever you want on there, but just give it a minute. CPD, as I said earlier, will be emailed to you by close of business tomorrow. Please don't phone me this afternoon so you've not received it. If you don't receive it by close of business tomorrow, check your spam, because the ones that don't receive it, 99% is in their spam folder. Then add us to your safe senders list. Give us a call if you've not got it. But please don't give me a call today, if you would, because it's unlikely I'm going to be able to answer it. Feedback, please help us out. If you go to Google or Trustpilot, you can leave just search for Specialist Hub. Leave us a review on there. Always very gratefully appreciated, and thanks in advance if any of you do that. Just helps us. These shows are free, not just to delegates, obviously, because none of you are paid to be here today, but also to all the lenders that are presented. We don't charge because we don't see this as a something we're looking to make profit from. We're looking to try and get some business in from this, from you, and also develop our relationships with our lenders as well. And lenders are happy to present for something when it's free, of course. So please help us out. Don't go to Specialists Hub, which is a training company within the construction industry, I believe, because they probably won't know what you're talking about. Thank you for today's sponsor, which is MT Finance. Big thank you to them once again. And thank you to Raph for stepping at such short notice because the BDM decided to hand his notice in. And a big thank you to Together for today's prize draw. And congratulations to Owen again for winning it. And thank you for it. I'm actually 10 minutes ahead. Blimey, I did shoot through that. Thank you so much for attending today. Always appreciated. Many of you have given up your valuable time to be here today. Enjoy the rest of your day. And we hope to see you again very, very soon. Thank you.